Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a rainy morning here in Mumbai. It's a Thursday morning and it's leaking a little bit as far as markets are concerned. So US markets taking a bit of a dive last night. So I think that's got to be the number one talking point. And it's not driven by equities. It's driven by what's happened in bond markets. I'm Prashant. With me, my colleagues Nigel and Rima is with us today. Guys, morning.
Hi, morning. That's the big theme, right? Bond vigilantes have woken up and they've pushed the yields much higher, 5% plus on the 30-year.
Well, we got plenty of market action to talk about, but just for a minute, wanted to focus on the IPL yesterday. Mumbai Indians qualifying for the playoffs. I was very, very happy. I was at the stadium with my kids and my wife, and
no wonder your voice is gone.
That unbeaten record continues. Whenever I've gone to the stadium, Mumbai Indians has won. So I would like to think that I'm the good luck charm. So, but what a win. What a win. The boys are on top of it. Played a little slow at the start of batting, finished it with a flourish, and then came in and knocked off all the 10 wickets. So, good and pumped up, but we've got the markets to talk about.
Absolutely. And, let's hope that the market also is able to turn the corner at some point, because the start is, of course, going to be slightly lower. So let's take it from the top, right, in terms of what you need to know as we begin this session. I'll start with, of course, just the price changes on the equity side. The S&P down about 1.6%, the Nasdaq down about 1.5%, and the Russell 2000 down 3%. So that's the overnight cuts across Wall Street that we saw. Now, straight away across the US yield curve, the 5, 10, 30, the 5-year was up about 8 basis points, the 10-year 11 basis points, and the 30-year hit 5.08. Actually, I think at one point it hit about 5.09. It was up 12 basis points on the 30-year. And this is essentially what led to equities coming under pressure. So there was a 20-year auction which was weak. I think it was the total quantum was about $16 billion or so, but it was a 20-year bond, and it was in a way underfunded, undersubscribed. I mean, it was quite weak, and that essentially raised risks of, once again, the fact that the bond market, what has been described by many, maybe a little extreme, as a buyer's strike. That the U.S. fiscal situation is bad, and people essentially want to be careful about not committing too much, and they want to diversify away from U.S. assets, bonds, of course, in this particular case. And I already kind of outlined the reaction. Yields shot up, people demanding much more to come in into U.S. bonds. That's the point. The 10-year, by the way, if you just look at what's happened since the beginning of May, it's up 47 basis points. It was on the 1st of May, it was 4.12. And now it's 4.59. That's 47 basis points in May so far. The question, as we always ask, is at what level do bond yields start to hurt equities? The simple answer, of course, is the psychological 5% number. If the 10-year goes to 5, I mean, I think expect a bit of a sell-off, etc. But I think it's now also widely acknowledged that it's not just the level on the yield, I mean, on the 30 or the 10 or the 5 or the 2 for that matter. It's the pace of the move and, how fast bond yields move. And in that sense, we're already up in short order, 47 basis points. And if you do more, I mean, just the pace itself, and you don't necessarily need to get to 5%, I mean, can start to hurt and start to do real damage as far as equities are concerned. So keep this in mind. By the way, it's interesting. What did we start this week, Monday, with? We started with that S&P downgrade. We started with news that on Sunday that that one big beautiful spending bill has passed. So in a way, if you want, you can read this as a bond market warning to not overspending. I mean, Trump and team have been promising to contract the fisc, not expand the fisc. But as the latest bill shows, I mean, there is no contraction, there is expansion. This latest bill, by some estimates, will add over $3 trillion to deficit by 2034. So there is no contraction. And, all of this, of course, needs to be seen in that particular context. Now, just to look at some of the other things, dollar index was down about 0.5. Oil prices were down about 1%. There was also some inventory data, apart from, of course, what happened. Otherwise, precious metals were strong. Gold, it had, it had swung down to about 3,100. It's back at about 3,300. Bitcoin briefly hit a fresh all-time high. That's broadly the picture that you want to pay attention to. Now, just to circle back and look at the levels here, important to look at levels on the downside. I mean, yesterday the market did a little bit, 0.5% or so, but not on a very strong and sure footing. It kept sort of waxing and waning through the course of the day. The 20-day moving average at 24,150 will be the important downside level on the Nifty from here. We are at about 24,800. So there is some distance to go. On the upside, 25,116 is the level to take out for the Nifty, for the market to pick up some momentum. Nifty Bank is close slightly above the 20-day moving average yesterday, but it's just a little confusing. I mean, how much should you read into it? It's only marginally higher above it. So the swing low on the downside at 54,690 is the important level to watch. And then the other downside levels, if this swing low goes, is 54,031, which is the lower Bollinger Band, and the 40-day exponential moving average, which is 53,505. So these are some levels and some indicators, etc. GIFT Nifty will come up on your screen, and I think it will give you a sense of how we start. It's about 60, 65 odd points lower at this point in time. Rima.
Hi. So Asia is also paying attention to the rise in the US bond yield. So across the board, whether it's the Nikkei market, Kospi, they're paying attention, they've taken note, and they're tracking the losses on Wall Street. So 1% gone on Taiwan. Nikkei is also down 1%. Hang Seng is lower by nearly 0.5%. So that ripple effect is seen across all markets. In terms of flows yesterday, while we did clock in just a 0.5% gain, the FIs bought pretty okay. So 2,200 crore bought by the FIs in the cash market yesterday, while the DIIs net bought nearly 700 crores. So it's good to see both institutions buying in our market. So what's on the deck? Two big earnings. So one is IndusInd Bank, and they've reported worse than feared net loss of nearly 2,400 crore rupees. But Interglobe Aviation is flying in bright skies. So very strong domestic demand has driven a big profit of 3,000 crore rupees. So mixed bag. IndusInd Bank on the way down and Interglobe Aviation on the way up is what you need to watch. Earnings today, ITC, Sun Pharma and Grasim. You also have the Nifty weekly contracts expiry, so volatility could spike towards the close of trade. And today is also the record date for the demerger of the lifestyle business of Aditya Birla Fashion and Retail, ABFRL. So that's what I'm watching. Nigel, what about you?
Well, that's right. Let's take the top three cues that I'm looking at from the global perspective. It was a bit of risk-off that played out overnight. That's why you did see that gold prices did spike up overnight. And after seeing a bit of a dip, it's pulled back very, very swiftly. The problem for global equities is that the US bond yields, the 10-year in particular, that's moved up in a matter of a month when it moves from around 4% to around 4.6%. That's a reason to be a little bit cautious with regard to the global market scenario. However, the dollar index cooling off, it's good for emerging markets, India included as well, particularly with regard to the flows picture. And after selling, it's good to see that the FIs return back to the buying list. Now, the Nifty is going through a brief phase of consolidation. And in this phase of consolidation, the clients that were net short, they gradually turn net long. And now, in fact, they're building on those long positions. The last count we have, clients are net long with close to 44,000 contracts on the long side. FIs, they're on the opposite end of the spectrum, not moved too much overnight. So I'm giving you the absolute number. They're net short by close to 38,000 contracts. This is not such a bad combination as I've been saying for the last many days. What about the options data? That becomes extremely important because today is the weekly expiry. You had some put writing that we saw yesterday, and the close actually was quite strong. We'll give back some part of that, what we put on yesterday. But you had the 24,800 put, 24,700 put as well, both of them seeing a fair bit of open interest build up. And the PCR is at the lower end of the band at around 0.8 or thereabouts, which brings us to the level. Since you saw writing at around the 24,700 put, premium roughly around 70, 80 rupees or thereabouts. So you're looking at the 24,620 level. Holding out, at least for today's trading session, a little lower than that is where the 20 DMA comes in. That's around 24,500 or thereabouts. But for today, you don't want this level to get breached. If you want to get some confidence with regard to the up move, you like to see a higher high. And that's the level that I'm looking at. That's the high that the Nifty made yesterday, around 24,900 950 or thereabouts. Remember, we are facing resistance at around 25,100. But for today's trading session, that's the level I'm looking at. The Nifty Bank, that's going to be the swing factor. IndusInd Bank reported a weak set of numbers. It'll be interesting to see whether some of those flows start moving to the larger, better banks as well, which may not be such a bad case for the Nifty Bank on the whole. So the resistance that we have, ran into the last many trading sessions, on the upside, 56,000 odd. On the downside, you don't want this 54,500 odd mark. So we're going to start off in the red. Volatility picks up in the second half of the trade. But I think if we can get through a couple of hours of trade, maybe in fact the bulls will fancy their chances if in fact the 24,620 level does hold out.
All right, Nigel, thanks very much for that. So that's the levels and the futures and options data, which is important to track as well. Phu Kien Yap is senior investment strategist at Standard Chartered Bank. He's with us. Phu, good to have you here. This bond market scare, is this going to pass once again? Or it'll be with us for some time? And that question, right, at what level does it start to hurt? What's your sense?
Yeah, no, thanks for that. I think the bond levels, it has been going up. The yields have been climbing. I think, wind back a month ago, I think the market was looking at 3 or more than 3 rate cuts by the end of the year. And now I think a lot of things have changed. Obviously, market concerns have eased a bit. So we're looking at less Fed rate cuts. That's on the short end. And then on the long end, I think we've seen it climbing as well. Also affected a little bit by the view on how there's less Fed rate cuts affected. But obviously now the discussion about the fiscal spending and the tax package there affecting the longer end yield. I mean, our expectation actually is that the 10-year, it will move to 4 to 4.25% in the 12-month, 1-year time frame. That is our own view. Because we do expect Fed rate cuts to come in later on to support growth as it slows down. But look, I mean, yields are going up at the moment. We see a lot of discussions going on in Congress, concerns obviously about the fiscal spending and how the fiscal deficit could unravel it in the US. But I think a lot of this, I think, is within the control of the politicians and the Trump administration. We do believe he is sensitive to what the bond market tells him. So that they will be able to come into some kind of agreement. But I think, much longer term, we're looking at 20, 30 years, there are inflationary forces, if you like. But if we look at the 10-year and how the Fed is going to be reacting, I mean, we're looking at it coming down to 4 to 4.25%. I mean, to your question on when it starts to hurt, I think, it's hard to say, but we are still constructive on the equity market. Like I said, looking at a 12-month view, at least, I think looking at the Fed coming in to support growth, we do expect yields to be coming down. And more importantly, we shifted the narrative very much from a trade war now into something else. But we think the trade war and how it affects recession is still going to be the key for equity markets.
But on the whole, yields inch lower to 4.2%, aided by a Fed rate cut, and US equities is still very resilient and headed higher. So there's a new acronym, right? Phu, ABUSA. Anything but USA, challenging the entire exceptionalism. You're not in that camp to ditch America.
No, we're not. I think post Liberation Day or 2nd April, when, the tariffs was shocking to the world, we saw a little bit of that when, the dollar weakened and yields going up, and we saw some rotation coming out of US assets. And I think a lot of that was due to the tariff shock. And we did see the US exceptionalism that's been going on for the last 10 years, perhaps, pause. We think that is a pause, actually. I think what happened in Geneva in terms of the agreement between US and China, look, it came about very quickly. And it was better than expected. So we think actually that was a very significant moment in terms of the negotiations. We do see a bit of the Trump put in action there, that he's willing to support growth and support the market. So US exceptionalism, I think, took a pause, where we don't see that going away at the moment. But the US market is still a very big chunk of it. We think attractive growth is still there. AI is still there. It's still early days into AI spending and earnings growth. So as the trade war fades, we believe the investors can still refocus again on the AI trend. And it's still going on there. I mean, the spending is there. Companies are willing to invest. And that's going to be supportive for earnings growth in the US.
Okay, all right. Hi, Phu. Good morning. Good to see you. Well, Phu, I think another way of tackling with Trump's tariffs is talking about a jet. Qatar did that with, gifting them the jet. And I think last night the South African president as well was joking, I don't have a jet plane to give you. And he said it would be nice if you did have one. So interesting times. But talking about the global equities, I recall you saying that India was a market that you liked a couple of months ago. We've had a very, very good run. Post this run, where does India feature in your scheme of things from the global equity markets? And also, I think you said that you'll be a buyer at gold closer to around $3,000 an ounce. So you're positive on that. Where is it headed?
Yeah, thanks very much for that. I think, we do have a core holding view for India at the moment. Within Asia, our preferred market is still China. And India, I think the recovery has been very, very good. But the earnings revisions is still a bit negative for the month of May. I think it's less bad compared to April. I think April we saw much more negative earnings revision. May it is still negative. So I think that is actually what keeps us cautious. India, as you know, very strong growth, but the valuations are quite high. So we think we really need earnings revision to turn a positive to support the high valuations in the market. But look, I think structurally in the medium term, India continues to be a very attractive market for us. As I said, as a core holding, that's what we tell our investors. Our preferred market is China, which I think the reasons are not new, but in terms of the valuation in there, it's attractive. Stimulus will be there to be supportive. And they have their own AI and technology developments as well. And the more recent news about the agreement in Geneva, I think is supportive of China. So I think to your question on gold, I think we do like gold. I think we have an overweight view on gold at the moment. Our 12-month target, 3,005. So yeah, we do see it as attractive to have in the portfolio to hedge against your recession and inflationary risk.
All right, Phuc, thanks very much. Good speaking with you. Appreciate your time here on CNBC TV 18. Well, Rima, you want to just tell us, what was that?
Abusa, anywhere but USA. AB, USA.
So USA is USA.
USA, and AB is
anything but.
Anything but USA. It's new one. Well, we've had so many acronyms, right?
Yeah.
FANG, there was...
I heard, so US exceptionalism, US unexceptionalism. That's Abusa sounds better. We'll take a quick commercial break here. We're going to come back and tell you the interactions which are lined up. Actually, let's just do that quickly. Deepak Mehta at 8:30 will be talking stocks. 8:35. You have the IndusInd Bank performance in focus. Digant Haria will be with us to tell us how to read those numbers. We'll also have Hetal Dalal coming up on that. Viatech Vabag Management will join us at 9 o'clock to talk about numbers. 9:20, you'll have Gautam Shah on technicals. He's a market master today. 9:30, Uno Minda will be speaking with us about their numbers. Protean eGov speaking with us at 9:40 to talk about, of course, the entire PAN issue that's been a setback for the company. 9:50, Gokuldas Exports Management runs us through the fourth quarter performance. 10 a.m. you'll hear from the Indigo management. Numbers have been super strong, and DLF management will be with us towards the end of the program. Stay tuned.
Time to slip into a break. We've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, give you a sneak peek. Interglobe Aviation, ONGC, Nalco, Viatech, Vabag, all of them will be reacting to positive news flow, and you have more number of stocks actually reacting to negative news flow. The list goes on as IndusInd Bank, Oil India, Mankind Pharma, Colgate, RVNL, and Aircon. Slip into that break, come back, we'll get into further detail on all of these names.
Welcome back. Yesterday, markets eked out a gain of about 0.5%. The Nifty closed at 24,100. This morning, Asia's under pressure. GIFT Nifty is lower by 60 points, but lots and lots of individual stocks to track, whether it's IndusInd, Interglobe Aviation, ONGC. So let's straight away get to our top 10 segment of the day. And these are the stocks to watch with our entire research team. But top of the list is IndusInd Bank. Abhishek?
Well, worst result in the banking sector that I have seen in the last 10 years or even more, from top to bottom across various parameters. So what's not worked for them? The corporate book decline is massive, more than 5.5% YOY and more than 15.5% sequentially. Now that's a tough one to swallow because it's tough to grow the corporate portfolio again. NII decline of 43.3% YOY and 41.7% sequentially is the highest decline in the banking sector in Q4 FY25. Net interest margin is the lowest ever for them, coming in at 2.25% versus 3.9% in the previous quarter. Now, the other income is down more than 71% YOY and about 70% sequentially, the highest decline that you are seeing in the banking sector at a time when other income for others have grown robustly. This is the only bank which has reported an operating loss in Q4 FY25 and the highest net loss in the banking sector in Q4 FY25. Slippages are elevated in absolute value. They have grown by 115% quarter on quarter, and the annualized slippage ratio is the highest that you are seeing in last 16 quarters, coming in at 5.8% versus 2.4% in the previous quarter. Asset quality, the gross NPA ratio is one of the worst in 10 years or even more. It has inched up to 3.13% versus 2.25% in the previous quarter. The bank has used entire contingent provisions of 1,325 crore, so they have no more buffer with respect to making provisions henceforward. PNL, it's a huge miss on our poll, both on the NII front and the losses being way ahead of our poll. Back to you.
Thank you very much for that. We have a discussion lined up on the Q4 performance of IndusInd Bank. Digant Haria of Green Edge Wealth Services and Hetal Dalal of Institutional Investor Advisory Services will be with us.
Okay, all right. Well, let's talk about a good set of numbers then. Vinny joins us to tell us about Interglobe Aviation. Vinny?
Hi, good morning. So in terms of numbers from Interglobe Aviation, a very, very strong set of numbers coming in, beat on all fronts. So factors that are leading to this beat: one, the revenue per available seat kilometer, that's seen a sharp improvement. Foreign exchange gains is also there. So that is something supporting the profitability of the company. Now, profits, overall operational performance was also quite good. When you're talking about the revenue available per seat kilometer, that is also at 5.3 rupees. Yields at 5.32 rupees versus 5.2. Pole was around 5.3, so in line with expectations there. Q4 overall forex gain came in at 136 crores, which is aiding the profitability growth of around 60% as well. And there was a loss in the last year and last quarter as well in terms of forex loss. So there is a support coming in on that front as well. What is interesting now, overall Mahakumbh festivities supported the growth in terms of increase in number of flights, but the outlook for FY26, the management is saying in Q1 FY26 they expect a capacity growth guidance in mid-teens and maintain the early double-digit growth guidance for FY26. This is the highlight that we have coming in from the con call. So that will be key to watch out for, because maybe some bit of a subduedness we could see coming in terms of revenue, but overall Q4 strong performance.
You know, the management also said that I think in April was fine in terms of demand, but May got impacted due to geopolitical tensions. So there were slower bookings in the month of May, which according to the management is behind them. So June should be okay. But May was a slower month for them.
All right, absolutely. And, you'll hear from Peter Elbers of Indigo at 10 o'clock this morning. ONGC and Oil India are the next in focus. Sud is here with details. Good morning.
Morning, Prashant. So factoring certain adjustment earnings for ONGC were largely in line with estimates. Exploratory costs have seen an increase of almost 3 times on a sequential basis because company has recognized travel well-off and it has recognized for the entire year in the Q4. That's the reason exploratory well costs were at rupees 4,173 crore versus 1,467 crore last quarter. Talking about the headline numbers, EBITDA was flat at rupees 19,000 crore. Margin was at 54.3% versus 56.5%, but it was higher against our estimate of around 52.8%. Talking about the operational details, crude realization was up 2%, crude sales have increased 1%, and gas sales were down 2%. I'm going with green for today, but considering the continued fall in crude, there might be a further decline in crude realization, so I won't be surprised if ONGC sees profit booking as well. For Oil India, I'm going with red. Other income has boosted profit, and profit was up 30%. Other income has increased by more than 250%. It has come at rupees 664 crore versus rupees 190 crore. Revenue has increased by 5%. EBITDA was down 7%, and margin has come at 35.9% versus 40.7%. And talking about the production, both crude and gas production have seen a fall of almost 3%. That's the reason I'm going with red.
Okay, all right, Sid. Thanks for that. Well, let's go back to Ekta. Ekta, tell us about Mankind Pharma. Numbers not too good?
Well, disappointing you'd have to say on the operational front. So revenue was up around 27%. Margins came in at 22% versus estimates of around 26% and a profit of around 400 plus crores, which was fine. But the domestic growth was strong, up 18%. Consumer healthcare up 14%. Exports did well as well. But the FY26 guidance was a bit disappointing as compared to consensus. So they have guided for domestic formulation growth of around 1.26 times. BSV revenue, which is one of the Bharat Serums and Vaccines acquisition, up 18 to 20%. Margins 25 to 26%. Macquarie said that FY26 guidance was below consensus estimates because they were working with estimates of 27% margins. They've guided for 25 to 26%. Expect the stock to probably be in the red today.
Thank you, Ekta, for that. It's over to Mangalam now for Colgate-Palmolive.
Well, it's a weak set that has come in from Colgate-Palmolive. No two ways about that. It was a tough environment. The companies reported a weak set where the revenues missed expectations. The EBITDA and net profit were largely in line with very muted expectations. So sub 500 crores for the EBITDA. The revenue was a miss at 1462 crores versus a street expectation of 1527 crores as well. Even if you don't look at what the estimates were and look at the numbers as they were reported, 1.8% decline in the revenue, 6.5% decline in the EBITDA. Margins were lower by 170 basis points and the net profit lower by 6.5% as well. The company said it was soft urban demand, but at the same time intensified competition that impacted their fourth quarter performance. So I saw a product being launched, a competitive product being launched by Unilever, and also a lot of these D2C players like Perfora, etc., are doing a lot better. So maybe they're losing some market share there. They anticipate continued near-term macro headwinds, and recovery, they say, is likely to be only gradual, and that too in the latter part of the year, which is the second half. So the next couple of quarters, the visibility remains low. The stock has been an underperformer, expected to continue to underperform.
All right, Mangalam, but what an outperformance last night from Mumbai Indians. Pumped up, isn't it?
All about Surya Kumar Yadav, the team. It was incredible, the way the team is steamrolling right now after a sputtering start. And on the other side, it was Delhi, which had a great start and then sputtered out of the competition. So all Mumbai Indians. Hail Mumbai Indians for now.
Well, that's right, Mangalam. And at the stadium, I met someone who was talking about Chartbusters, and they said life is FMCG. I said, I think you got it. You turned it around. It's FMCG is life. Thanks a lot for that, Mangalam. But from the FMCG basket, let's talk about metals. Nalco. The numbers are expected to be good, and boy, oh boy, those numbers were very, very good. So solid set of numbers out there. Top line growth of close to around 47%. The EBITDA number going up by 150%. And margins, on a year-on-year basis, it looks beautiful. But even on a quarter-to-quarter basis, from around 50%, it's expanded to around 54%. The important point was they got the benefit of higher prices, but also lower cost of power. And that's clearly depicted on the screen because the cost of power is a percentage of sales. That came down to around 16% or thereabouts. The profit number, well, that as well ballooned up by close to 47% because depreciation had a bit of a one-off in that. So that explains why the profit number as well was up 47%. Segmentally, things look very, very good, both on alumina, which is the chemicals business, and aluminium. So the stock opens up in the green. The problem is, are these the peak numbers? The key determinant will be what's going on in Guinea with regard to bauxite availability, because that's what's pushed up alumina prices. So stock opens up in the green, but we'll have to see how it does from there on. These numbers, though, blockbuster. Going back to Vinny, RVNL as well as Ircon, you're tracking both those two?
Absolutely. Keeping an eye out on both these names after the numbers. Not a great set of numbers coming in from both the companies. Firstly, RVNL, they're seeing a decline of around 4.3% in terms of revenue. The slow growth has continued through the year of FY25, so it's nothing different, but so muted performance overall for FY25 as well. Margins have remained largely flat, 6.73% versus 6.8% last year. So muted operating performance, slow growth, that is something in terms of the impact that we could see coming in on the stock as well. Execution is going to be key for the company going forward. As of now, expecting red for this one. Ircon International also expected to open up in the red. They're seeing a decline of around 10% in terms of revenues. Margins have seen a 100 basis point contraction. Overall weak operating performance. Other income is down by 11% as well. So that is something to keep an eye out on. Weak set of numbers from both the companies.
All right, Vinny, thank you very much for that. VATech Vabag is the next one. So interesting company, always lots of interest around this theme. Vivek is here, though, with the quarter numbers. Vivek, morning.
Well, good morning, and the management will be joining us later today. So quite a lot to ask about, but key amongst them will be what is the kind of order prospect pipeline that you're seeing, especially as far as the Middle East is concerned. But let's have a look at the Q4 numbers themselves. Revenues higher by 24%, so it's been a good execution as far as the end of the year is concerned. EBITDA higher by close to 22% on a year-on-year basis. EBITDA margins, that'll be the only blip as far as the performance is concerned, 12.2% versus 12.4, 20 basis point decline. And as far as the profitability is concerned, higher by 37.5%. At the end of FY25, the order book remains quite strong at 13,700 crore. FY25 order inflow of close to 5,700 crore. Remember, in FY25, the company did see a cancellation of a large order as far as Saudi is concerned. So replenishment of the order book is something that will be key to watch out for. The company also says they are the preferred bidder as far as projects are concerned of over 3,000 crore. So L1 status for projects over 3,000 crore. Amongst the key things to watch out for, remember FY25, the company has managed to grow top line towards the lower end of the guided range. So that will also be something that the street are looking out for. Strong Q4, that should keep the stock in the green today.
Thank you very much for that. And at 9 a.m., we will be joined by the management of Viatec Babak to discuss their Q4 performance. And here is a quick recap then of the top stocks. Stocks with positive news flow are Interglobe Aviation, ONGC, Nalco, Viatec Babak. Stocks with negative news flow are IndusInd Bank, Oil India, Mankind Pharma, Colgate Palmolive, RVNL and Ircon. Moving on then, equities are sinking, but Bitcoin is surging. Manisha is now joining in for a roundup of all the action from the world of commodities. Manisha.
Well, thank you for that. Since you mentioned about Bitcoin, well, yes, we have seen a very, very strong surge, 17% up for Bitcoin now for the month of May and 62% up in this year already. So we're looking at very strong gains. Well, support coming in from, risk on, the kind of liquidity that the street has right now. And of course, the kind of legislations and conversations that we hear from US has led to a lot of Bitcoin accumulation, not just from techies and enthusiasts, but also from companies and public companies and ETFs as well. Well, that's about Bitcoin, but we are also looking at good going when it comes to the precious metal space. Gold is trading at a 2-week high, silver at a 3-week high, platinum trading at a 51-week high, and it's a similar strength that has continued for base metals also. Aluminum is trading positive, copper is trading a percentage point higher, HRC steel is trading at a 4-week highs as well. So metals also doing good. The only area that hasn't done well in the Asian markets right now has been energy. The crude oil prices have gone in for some profit taking as the U.S. crude inventories have risen. And the markets will now watch out for the U.S.-Iran fifth round of nuclear talks. Well, that is scheduled on 23rd of May in Rome. That would give you further directions in this space.
All right, Manisha, thank you very much for that. What we're going to do is we're going to take a quick commercial break and we're going to come back with a discussion on IndusInd Bank. That's coming up. Digant Haria and Hetal Dalal will help us with that. Deepan Mehta, of course, will also be with us on IndusInd and more stuff. Stay tuned.
Welcome back. Hope you're having a good morning. Well, there'll be a lot of stocks in focus and top of mind is going to be IndusInd Bank. In fact, IndusInd Bank's chairman Sunil Mehta addressed the media about the bank's recent discrepancies seen in the books and what steps the bank plans to take to rectify this. Let's listen in to that soundbite.
Based on review of all these matters and reports received by the board suspects the occurrence of fraud against the bank and the involvement therein of certain employees, having a significant role in the accounting and financial reporting of the bank. Accordingly, the bank has directed necessary steps to be taken under applicable law, including reporting to regulatory authorities and investigative agencies, and to also fix accountability of all persons responsible for these lapses. The financial impact of all the above has been fully taken in the audited financial statements of the bank for the financial year 2024-25. The bank's approach towards financials has been to start FY 25-26 on a clean slate without carrying forward any of the past issues. The bank has thoroughly reviewed all the lines of accounting and has taken a conservative view in some of the accounting treatments. Following the findings of external review announced on 27th of April 2025, the bank's CEO and Deputy CEO had resigned from their respective roles thereafter. The RBI has advised the bank to submit proposals for appointment of the new CEO for RBI's approval by 30th June 2025. The board is at an advanced stage in the selection process and is confident that the recommendations will be submitted to the RBI in advance of the timeline prescribed.
Okay, that's Innocent Bank. And if you see the brokerage verdict, despite the stock being apparently okay in terms of valuation, 0.7 times price to book, we've had multiple downgrades. HSBC has downgraded the stock today. IFL Capital has downgraded Innocent Bank. UBS is putting a target price of 600, so much lower than where the stock currently closed at 770. Let's, talk about the way forward. Digant Haria, founder at Green Edge Wealth Services, and Hetal Dalal, president and COO at Institutional Investor Advisory Services, IIAS, are now with us on the show. And we also have Dipan Mehta joining in. Digant, the first question is, do you think this is a kitchen sinking kind of a quarter? And your thoughts on the Q4 performance. And it's going to be very hard, the recovery, the repair from here on. It's an uphill task to kind of get the investor and customer confidence back. Both, one, is this kitchen sinking? Is this it? The worst is now in terms of the numbers and the recovery from here.
Yeah, morning, Rima. See, whenever such things happen, we've seen like almost instances of 10 accounting lapses / frauds or whatever you want to call it. So it's not a one-off event that, the top management or the board would not be knowing and, it just happened somewhere, in the side cabin of some employees. It's not like that. I think the rot runs really deep. And see, this is not something that the management came out on its own. These were the findings when the RBI audit happened. So let's be very clear that, this is a tussle between, say, RBI and the bank management. We have seen such tussles in the past with, say, a Bandhan Bank or a RBL Bank. And RBI in India is extremely strict. They are very, very careful about the depositors' money. So they will clean up. They will clean up the bank. But it's a long-run process, as you said. More than a year or two will go. Difficult to trust them at this stage. But, because all these things have come out of an RBI audit, we know that, a lot of it is already been taken. From an investor's standpoint, I think it's a wait and watch. It's not an easy journey. So those are my opening comments, Rima.
Yeah, no, absolutely. Makes sense. Hetal is also with us. Hetal, good morning. First thoughts on this entire issue?
So look, it's not unexpected, right? The minute they announced the entire derivative accounting piece, and then there was this whole story around the microfinance book, and the fact that there is now a leadership vacuum and essentially a leadership change, would expect that the bank would take the big bath, so to speak, and clean up the books to the extent possible. I think there are significant failures around the chain, right, in terms of just the oversight, the internal audit, the statutory audit, and several layers of audits that banks go through. I think what is likely to now happen is you're likely to see a CEO coming in from the outside. That's more than likely because RBI is unlikely, given the fraud that the board has talked about. RBI is unlikely to sort of agree to an internal candidate. You're also going to see a significant review of internal processes and systems internally. It's going to slow down the bank. The bank is likely to be far more inward focused, at least for the next 1 year, till they are able to build the confidence back from depositors and investors and other stakeholders.
Digant, do you, coming straight away to what happens next for our audience, a lot of whom would have Innocent Bank or sold or would be thinking what to do. You just look at what the stock has done. It's not fallen, even as many of these newer things have come out, right? It's if anything, I think over the last 1 month, it's up a little bit. So there is this expectation that, this, as Hetal said, the big bath and then the cleanup, and then some new person will come in and, he'll be able to really push this bank in a new, different, better direction. That's essentially equity investors for you. Of course, always hopeful. You've got to be hopeful. What is your sense, Digant, in that sense? What would you tell them?
Yeah, so Prashant, I think the news floating around was that along with a very, very disastrous set of results, maybe IndusInd would announce a very good private banker or, a team of private bankers as the new management. And I think that is what was building in this optimism that, like Hetal said, everybody knew that there is a fraud and there could be more frauds. But even then, stock price was not reflecting a lot of that because there was this optimism of private bankers coming and leading the bank out of this trouble and back to glory. I think that hope, they've not announced the candidate yet, which means that, probably RBI may want to put a candidate who will first be very tight and on the cleaning up side and then think about growth. So I think this whole expectation gets delayed by at least 6 to 12 months. So I think for shareholders, it's going to be a painful journey. Like stock will oscillate between 600 to 800. I don't think there is an existential issue or anything of that sort. So there is not a very big reason to panic because this is RBI intervention, which is getting all these things done. But yeah, the quick buck, absolutely no, probably, 10% lower. And then, you will oscillate between hope and agony, over the next 1 year. It's not an easy task. You look at Bandhan Bank, you look at RBL, it took at least a year to get to some strategy and, some stability.
So Digant, basically the stock becomes a touch me not for the time being, till we get clarity.
For long term, for investors, yes. For traders, probably it will be a delight, Nigel, that, you can short, you can long, based on the news flow and the levels. But I think, valuations are quite okay. And see, whenever, problems with RBL, Bandhan, they don't go below 0.6, 0.7 times book because, we know that RBI does not let the banks fail in India. And, if banks don't fail, they eventually, revive. That's the whole premise of this investing.
Okay, all right. Let's get in Dipan Mehta as well. Dipan, what's your view on IndusInd Bank? It's been a disappointment. I think in the past you have said you have been very disappointed and I think there was some exposure as well out there. What do you do from here on? Hang on, sell out, look to average? What is it?
Yeah, good morning, Nigel, and thank you for having me on your show. I think the time to sell is gone and we, like all other investors, are stuck in the stock and need to take a long-term view as usual because eventually these things will get sorted out. But what I like is the fact that as compared to a lot of other situations in the past, be it Bandhan, RBL, and we've had even Axis, ICICI, actually every single bank with the exception of HDFC has had some issue with spike in NPAs or a default or a fraud or something like that. And IndusInd Bank is no different. But they all come out of it, and I'm sure IndusInd Bank also will come out of it. But they are in a far more stronger position than any of the other stories in the past, be it RBL or Bandhan Bank or Axis or ICICI for that matter. Their NPA still remains there about 3% or so. They have a good tech platform, I would say pretty strong brand and distribution network. It's just that the top leadership needs to be changed, and someone who's more dynamic at the same time understands the business better. If he takes over, then certainly the business can get turned around. And who knows, 3-4 years from now, the stock price can give very good returns from these points, from these levels, sorry.
On a lighter note, Dipan, maybe somebody not so dynamic.
Maybe somebody who's more conservative, but eventually I think, the business is such that it's a growing industry and, IndusInd Bank can certainly recapture the lost ground and lost market share of the past year and a half or so.
Hetal, is this the first time the management has acknowledged of a fraud? Of a suspected fraud? What was the prior communication from the management on the word fraud? And secondly, if the RBI appoints a nominee director on the board, what kind of signaling will it send to the investors?
Look, I think the management in the past has talked about the fact that there have been lapses and there are concerns around accounting, but this is the first time they really talked about it as a fraud, and fraud has very severe sort of implications in the banking system. And therefore, the kind of oversight and the kind of intervention that you'll now see given a fraud of this nature and this size is likely to be different from simply saying that there are accounting lapses. I think having a nominee of RBI on the board is par for course for a lot of banks, but this will therefore, if you actually have an RBI nominee on the board, it's going to show a lot more, sort of signal a lot more severity of the problem, and RBI stronger oversight in ensuring that the cleanup actually happens. So if you have an RBI nominee on the board, it's actually good from a stakeholder perspective. And it will ensure to a very large degree that the RBI nominee is also there in terms of providing better oversight and control.
Digant, as you said, right, investors were hoping that a marquee private banker his name gets announced as a CEO. If that comes through, because the deadline is 30th of June, if that comes through, would that be a buying opportunity?
I think, Rima, this will be, as I said, it will be a trader's delight because, see, we have seen this movie with Bandhan Bank and with RBL. So, just let me rephrase what this movie can look like. Maybe in the next 2 months, you get an announcement. If it's a private banker, the stock will go up. If it's a PSU banker, then we all know that, okay, it's a long journey towards the cleanup. And then, once a new MD, CEO and a new team is announced, they will fire the old ones. Then, some more process issues or accounting issues may come up because, the new guy would want to come and say, hey, this is not something which I have done. So he'll probably clean up even more. So, the first announcement will give some hope. The stock may go up. Then the cleanup will say, oh, the problems are not over. Then the stock will come down. And then eventually things start stabilizing and then we can see a secular journey. So I think 6 months, it's going to be a trader's delight, you buy, sell, whatever, based on the news flow. But I think within the next 1 year for a long-term investor, probably zero returns is what we can expect for the next 1 year.
Net. After all the ups and downs, which, as Digant is saying, is likely. Thanks very much, Hetal and Digant for that perspective and that quick take this morning. Appreciate it. Deepan, of course, stays with us because we'll address more names with him. We'll take a quick commercial break here. There's 12 minutes to go for market pre-open. Okay, welcome back. 10 minutes to go for the pre-open session. There's 70-point cut coming through on the gift Nifty sale. Sudarshan Sukhani is with us and so is Shilpa Raut. Sudarshan and Shilpa, thanks very much for being with us here. Good morning. Sudarshan, you go first. Once again, it's a bit of a scare from US markets, but, we've had one dip earlier for 2 days this week, got bought into, as we saw yesterday. What is your sense, Sudarshan?
Yeah, good morning. See, my sense, it changed. The view changed on Tuesday when an unexpected deep correction came about. That was the third day of that small consolidation, and the markets fell rather than go up. So yesterday, my sense was, do not trade the Nifty. There is no clarity. Unfortunately, that view continues to remain. The Nifty, yes, we saw how volatile the market was, the index was yesterday, going down, going up, again coming down. That's not a tradable index today. My view continues to be the same. Uptrend that we saw has at least seen a significant pause. I don't think we should be looking to trade the Nifty. There is a single trade in the Nifty. If we see a sharp correction towards 24,600, that we can buy with a tight 24,500 stop. That's a 100-point stop approximately, or 120 point. Apart from that, if you don't see a correction, if you don't see anything else, don't trade the Nifty. Focus on stocks.
Okay, don't trade the Nifty. Only if you see a sharp pullback, then maybe, in fact, you want to take a buy call over there and keep a 100-point stop loss. Got that, Sudarshan. Shilpa, how are you feeling about the Nifty today? What are the levels you're looking at on the downside? And I think the gift Nifty is suggesting a 80-point downtick. Buy the dip or stay away?
Good morning, Nigel and everyone, and thank you for having me on the show. Talking about indices, we have been speaking on daily basis that 24,700 is going to act as a support. If we hold that, then we'll always see that sharp upside move of 100 to 150 points. Not 25,000, but 24,700 to 25,000 plays the range as long as we are not reaching either on the one side. But as of today's setup, I feel that, we might see a slip and we might see 24,500 levels coming as well. The data is somewhat little more on the bearish tone than, on a consolidation or any sort of bullish tone.
Okay, all right. Let's get to stocks then. Data towards the bearish tone. That's what Shilpa is saying. Shilpa, you go first. Stocks that we should be looking to trade today?
I have a sell on ABFRL. We saw, quite a meltdown yesterday and the stock has closed below 270. So from here, believe 245 to 250 levels, anywhere in between these levels can be the next targets. Keep a stop loss at 275, and this should be a sell. The other one would be a sell in JSW Steel. If it breaches 1000 levels, then it is a breakdown where you will see levels of 970 to 960 coming. So in that case, keep a stop loss of 1025 and stay on the sell side. The other one, I have one buy. The buy would be in Policy Bazaar. Policy Bazaar yesterday saw remarkable outperformance, and it is heading towards 1800, I believe. So keep a stop loss of 1695 and stay long in Policy Bazaar.
Yeah, no, absolutely. Sudarshan, what about you? What would you want to trade?
Well, it's a mix. Siemens is a buy. It's a stop under 32.30. Tata Consumers is a buying opportunity. Stop under 1115. FMCG stocks are all giving buy signals. I'll just find, we don't know why, but maybe you know better. But M&M is an intraday short with a stop above 31.50. And IDFC First Bank is another intraday short with a stop above 68. So it's a mixed bag.
Okay, no, it is a mixed bag, but I think kind of reflects the broader market view, which is a bit of lack of clarity at this point in time. Thanks very much, Shilpa and Sudarshan, for joining us. We'll speak again soon. We'll take a break. We are back. But there's the pre-open, of course, to look at. But we also have the management of Viatec Vabag to talk about their fourth quarter performance and road ahead. Stay tuned.
Welcome back. In conversation with Dipan Mehta, awaiting the market opening. Dipan, a stock which was under severe pressure yesterday was Dixon. The numbers were underwhelming. What would the advice be?
Yeah, Rima, I think that it came below expectations, but if you didn't have much expectations, then the numbers were pretty decent. And it's a high growth company, and any misses are going to be punished like this. Valuations are also on the extremely rich side, but look, there are very few pockets of growth within the entire listed space. So we're going to see this kind of concentration of high valuation in a few counters. As investors of Dixon Technologies, we remain invested because the long-term story is pretty decent, and just because valuations are high doesn't merit a sell. But from a fresh investment perspective, I would just wait and watch and look for values to, when the valuations compress, that's a good time to get into the stock. But I think next 3 to 6 months may be a bit challenging for Dixon Technologies. So I would just avoid for the time being, but certainly not a sell.
Do you or anyone in your team look at Protean eGov? What have you made of the numbers, the conference call?
No, I haven't seen the transcripts of the conference call, but of course, I think client concentrations are coming to the fore over here. And look, if the valuations were cheaper, it's one thing, but these are so richly valued stocks that any negative news flow is certainly going to have a very damaging effect on the stock price. And I think that, that's something to consider at this point of time.
So from the numbers that came yesterday, and there are lots of them, we had Nalco, Viatec, Vabag, etc. Which one stood out for you?
Viatec, Vabag, and I'm looking forward to the interview with the management. And I think great set of numbers. What I like best is the fact that, they have a nice diversified order book position. I think apart from L&T, this is the only EPC or engineering construction company which has got such a geographically diversified order book, which certainly improves the business model and also gives more predictability to the earnings. So looking forward, and stock is pretty reasonably valued. So disclosure, we and our clients are invested in it.
No, absolutely. It's although the high, it was made at about almost $2,000 and stocks at about 1,410, and that's essentially what the valuation. And we'll of course have the management joining us in just a bit to run us through the numbers. So there you can see it. Mr. Sitaraman is ready to sort of join us. I think we'll just address the pre-open session and just look at what's happening in the pre-open as things kick off. I think it should be in the range of being 65, 70 points, and then we'll kind of move from there. So there you go. The first change, it is higher, but I think it expected to settle down as it always does. And I think we'll get a better sense of things. I mean, this week, like last few weeks, so big moves, large moves in terms of single stocks. I think, of course, this week the big casualty was Protean. The other, of course, PAC, which continues to be in focus, in and out of favor on a day-on-day basis, depending on when you look at it, of course, is the defense PAC. So lots happening in that sense with these names. Deepan, thank you very much for joining us. Good speaking with you. And I think we'll actually, do stay tuned, because I think we have the Viatec Vabag management joining us. Rima.
Indeed. So straight away, let's invite the management of Viatec Vabag. The company for the full year reported a top-line growth of 15.4%. EBITDA margins came in at the lower end of the guided band of 13 to 15%. Skandar Prasad Sitaraman, CFO at the company, is now with us on the show. Thank you very much for joining in. So FY25 top-line growth of 15.4% is at the lower end of your guided band of 15 to 20%. On revenues and margins, what can you guide for FY26?
Hi, good morning. Good morning to your viewers, and thank you for having us on your show. I think let's start off with what we have done for this quarter and year. It's a historic high for us, whether it comes to top line, whether it comes to EBITDA, PAT, cash. We have from whatever we have guided the market, we have met almost all the targets well. Especially if you focus on the quarter four, it's a very, very strong quarter that we are starting with. The projects have started to move forward very well, large projects. And of course, we are very well diversified, whether by product or by geography or by our offering. And that gives us a very good foundation as we move forward. From top line and margin guidance, we are in an EPC business, so a multi-annual guidance is what will be more relevant, considering that projects run over years. And this, we have already given the guidance in the last year that we would aim for a 15 to 20% CAGR of top line growth, being the 13 to 15% EBITDA range. Continue to remain net cash positive and deliver a return on equity of 15% and over. And this, we think, right from the first year of guidance, we have met all of those. Our order book is also extremely strong. Our cash flows are extremely strong. We're sitting on almost 1,000 crores of gross cash, 700 crores of net cash if you exclude the HAM SPV, which is transitory. And you can see the board has also expressed confidence in the performance, right from the cash reserves that we have, the growth in margins, and the outlook for the next years, and has recommended a dividend of 4 rupees after.
Mr. Sitaraman, good morning. Prashant here. So yeah, that's a long-range guidance which you've kind of talked about earlier as well. Could you just, since we are at the start of the new financial year, just run us through the order booking and how does it split? As you said, products, geography, just that split will be helpful. The overall number and how does it split?
So, Prashant, we are already sitting on a close to 14,000 crore order book. And we are a preferred bidder in orders of about 3,000 crores. So in a couple of weeks or a couple of months, our order book will sit at this 17,000 crore range, which we initially guided at. It's only a matter of time. If not for the order in Saudi, which got delayed, where we have rebid and we are preferred bidder already, we would have hit that target by now. But nevertheless, it's only a few weeks, months away from getting there. When it comes to product mix, geography mix, you know very well, we focus only on emerging economies. India, Middle East, Africa, CIS countries, Southeast Asia. This has been our focus. We have defocused from Europe. We have divested 3 European subsidiaries to ensure that we can invest our time and effort on the emerging markets. From an emerging markets perspective, again, Middle East and Africa will remain a very key growth engine. You've already seen we have secured one order, which is 370 plus million order from Saudi, from Al Hayar. And we are, as I said, already preferred bidder in another order in Saudi Arabia, which is also a large order. So Middle East Africa will be a very key growth engine. While we will focus on the growth market, Middle East and Africa will be a very key growth engine. From a product perspective, desalination, wastewater, reuse, and industrial water. That's been our focus areas, which is manufactured water in all. And that is where we will put our maximum effort, and that is where we see the maximum amount of orders coming back to us.
All right. Hi, Mr. Sitharaman. Good morning. Good to see you in. Nigel on this side. You mentioned that Saudi order a couple of times. That's the big trigger, right? Give us a timeline. Weeks, months and years. You said all of them. How long before we hear about that the rebidding of that Saudi project?
So, Nigel, I never said years. I said couple of weeks, maybe a couple
weeks, and then I think months as well. Yeah. So how long before the next quarter we should hear about this? If you could give us a timeline.
We are very hopeful that before we come back for the next quarter results, we should be able to give you the good news.
And what would be the size of the Saudi order that you're expecting?
It will be large. You know, we have already we won this order a few quarters back. It'll be a similar size. While I can't give you exact numbers since it is under evaluation, but you can expect the broad sizes are the same.
Mr. Sitharaman, I remember in our earlier conversations, a lot of the orders, this is water, right? And a lot of the orders come from multilateral organizations, right? Could you tell us what proportion of it is from these organizations? I mean, UN affiliated, etc.
See, the way we see payment security is that the order should fall, and that's our first C for order intake. Either it is multilaterally funded or federal government funded or sovereign backed. So this is where 95% of our EPC order intake falls, whether it is ADB, World Bank, AIIB, JICA. If you see top few orders, I'll mention. Our Senegal order is JICA funded.
Got it. So would you? I get that. What would multilateral is significant within this mix?
Multilateral, yes. I'll split it into three. In India, we focus on a lot of multilateral. In the Middle East, of course, it is more sovereign backed. Again, in Africa, there's a lot of multilateral. And wherever it is more industrial, it's LC backed. So India and Africa are largely multilateral orders. Indian, Eastern,
and there is no risk here, Mr. Sitharaman, because US has been a big part in terms of providing funding across multilateral organizations. And now the US is pulling back across the board. At least that's, it's not just in your industry, but so many other projects. Healthcare, for example, we hear from companies which work in the vaccine segment. So US is pulling back, and that's the source of big money across these organizations. Is that a risk at all?
I think we can afford to cut down on many things, but not water. And that we have seen. We have not seen any impact. We have not seen multilaterals come down on this. At least we are confident that water will not face that. Water will in fact have a lot of tailwinds because there is also urbanization, industrialization. All the new industries require high-tech water, high-quality water, ultra-pure. You take anything, you just see the economics, right? You see EVs, you see hydrogen, you see semiconductor.
No. It's not. Mr. Sitharaman, it's not about the importance of water. It's just that the US, why should we spend elsewhere around the world supporting these projects? I mean, better to spend in the US. So the logic seems to be that. Of course, I mean, you do what you do. Desalination is absolutely critical and is very much required. But it's just that the source of funding, I mean, at least, especially the US, seems to be a little more tenuous. But you don't see any impact right now. That's what you're saying.
Not at all.
Just some quick questions. 14,000 crore, what portion of it will be executable in the next, say, 12 to 18 months?
See, we have, if I'm not wrong, about 4,000-5,000 crores of O&M, and the remaining is EPC, which would be executed over the next 2.5 years.
Got that. And India witnessed a slowdown in orders and execution. What's the outlook here?
I don't think we experienced a slowdown anywhere. In fact, if you see our quarter four, we've only gone strong. We have a top line growth of close to 30%. So we are only seeing tailwinds. This execution will only go faster. All our mega projects are in full swing today.
Got that. Thank you very much for joining in. We've settled in pre-opening. IndusInd Bank is down nearly about 2.5%. But let's go across to Sudarshan now for his 9:10 call.
Well, Tata Consumers, consider buying Tata Consumers with a stop under 1115.
Thank you. And let's talk about IndusInd Bank. Big opening gash. Abhishek joins in with a brokerage view.
Well, brokerages have written on IndusInd Bank. They have cut the earning estimate anywhere between 35 to 40% on an average and 45% on the higher side by Motilal Oswal over the next 2 years. So loan growth to be in single digit by most of them in FY26 is their estimate, and around 10% for FY27. They say that the bank will now face difficulty with respect to touching the 1% ROA mark. The path is long drawn for them. ROE to be below 10%, around 6 to 8% over FY26 and 27. The next event to monitor will be the recommendation of CEO by the board to RBI by 30th June 2025. So brokerages have downgraded a stock like IIFL Capital and HSBC have downgraded to reduce. The target price has been cut massively by most of them. IIFL Capital, Investec, Nuvama, as well as HSBC, CLSA and Jefferies have cut the target price, while Macquarie remains the bullish call on IndusInd Bank. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vineet. She's here to tell us about IndiGlobe. There's a bull and there's a bear as well in the offing. Vineet, take us through both the pieces.
There are many bulls, but one bear that is coming in for IndiGlobe Aviation. So let's talk about the first one that's coming in from Citi. They're maintaining their buy rating, target price of 6,500 rupees per share. Obviously, the numbers were quite good, so they beat the expectation of Citi as well. Mahakumbh festivities, passenger load factor was good. So this is all what Citi is highlighting, and as well as in terms of the management commentary. So they're optimistic on that front, and that is why they're maintaining their buy rating. Morgan Stanley also is positive on the stock. They're maintaining their overweight rating. Target price has been raised to 6,502 rupees per share. Also, they expect the YOY yield weakness in Q1, but they have still raised their FY26 EPS estimate to 9% and FY27 is at 4%. So they too are positive on the stock. Now, Jefferies, positive note coming in here as well. Buy rating, target price 6,300 rupees per share. They've raised EPS by 6%. On the back of lower crude estimates that they're expecting, which will offset the weakness that one is expecting to see in Q1 FY26. Now, on the flip side, and the bear that is there on the street is Investec. They're maintaining their sell rating. Target price is 4,050 rupees per share. They're saying that, obviously this benefit that one is seeing of Mahakumbh is not going to be there. So that's going to go off in FY26. But even in terms of engines, Pratt & Whitney compensation that is going on right now, they expect that to fade off in FY26. Indigo has been reducing its dependency on Pratt & Whitney engines over the last few years. So that is something in terms of compensation will also start going off. And they expect further decline in FY26 before they're expecting in FY27 a recovery. So FY26, they're expecting weak, and that is why the sell rating.
Vinny, thank you very much for that. Stock's actually flat in the pre-open session, and we'll pick it up from there. It's, of course, done extremely well last couple of years on the share price. Let's just focus on Colgate for a quick bit as well. Mangalam is here to shine the spotlight in this one. Mangalam.
There's a big set that has come in from Colgate, no two ways about it. If you look at the revenue, the street was working with a number upwards of 1,500 crores. The company's gone ahead and reported numbers a little over 1,450 crores. The EBITDA, not much was expected. The street met that. The company's reported numbers met street's expectations. The net profit as well, muted expectations, muted performance is what has come by. Even if you strip off what the street's expectations were and look at the numbers by themselves, a 2% decline in the revenue, 6.5% decline in both EBITDA and net profit, with the margins contracting by 170 basis points, not particularly, enthusing. And the management's commentary wasn't great either. They said that there has been softening urban demand, but at the same time, competition has intensified. They expect the near term to be muted. More than that, they expect only a gradual recovery, that too in the second half of this year. So all these factors may impact the stock, which has already been an underperformer, but trading at 40 times FY27 earnings.
All right, absolutely. Thank you very much, Mangalam, for that. What do we have? It's a 1/3% lower start on the Nifty, 24,714. Nifty Bank is down about 0.4. 54,825 on the Bank Nifty. The Sensex is down. The small cap index is down about 1/3%. And I think you've got the mid cap index, which is down about 0.5 odd percent as well. 56,400 on the mid cap index coming through as well. So unexpected lines, 24,700 now on the Nifty. So ticking down a little bit. Heat map coming up on the Nifty. And it's largely on the downside with few gainers, about 8 or 9 gainers, but everything else is starting in the red. Rima.
The Nifty at open has lost more than 100 points, so it's currently at 24,700. IndusInd Bank is your top loser, straight away 4% lower, 740 on IndusInd Bank. IT is on the back foot, cuts of more than 1% on HCL Tech, on Tech Mahindra, on Infosys, on TCS. This is following the 1.5% knock that we had on Nasdaq overnight. ITC is weak ahead of its numbers later today. ITC share price is opened with a cut of nearly 1%, and Reliance Industries is also exerting pressure with a downtake today. Other notable drags include a Power Grid, a Shriram Finance, a Nestle, Trent. So a couple of these consumption names, FMCG names, also weak in trade. There is only one Nifty stock with a gain of 1%, and that's Adani Ports. So that's the top gainer right now. But other than that, Adani Enterprises, Coal India, BPCL have a green tick. ONGC should also come up for you on your screen, reacting to numbers. ONGC share price is up nearly about 0.5%.
Well, that's right. You know, this company we just spoke to, Bartek Babak, just take a look at that stock. Bursting away, the stock is up close to 9%. Big up move is what we're seeing out there. In the final minutes of trade, in fact, we did have NTPC Green that came out with a set of numbers. Bazooka move out there. Remember, the stock had danced away. I think it had given a 40-50% return post its listing. But post that, it did pull back to the IPO price. And now, in fact, it's getting back into form. So that stock is up and about in today's trading session. A couple of other big movers in trade today. Nalco, the numbers are good. The stock pops up close to around 3%. Sustaining this gain is going to be important. And a couple of other notable movers on large volumes. You have Dishman Pharma. I think that one, in fact, is up close to around 8% now. VRL Logistics. On the top line, it was a bit of a disappointment, but it seems the management is now focusing on the operational performance. And the margins actually were a pleasant surprise out there. So that's why that stock is up close to around 7.5%. Big move is what we're seeing out there. And Cosmos First. That's the other one that's trading with good gains as we speak. So a couple of these stocks actually doing very, very well from the broader markets. On the flip side, a few stocks that are getting clobbered. You have AG Infra, that's down close to around 8%. So big downtick is what we're seeing out there. JMM Pfaudler as well, it lost its form, and now in fact, post that, it's never been able to get back into form. So JMM Pfaudler as well, down close to around 5% as we speak. The market's now at the low point of the day. IndusInd Bank, that's the top loser, but in fact, it's pulled back some losses from the lows of the day, now down only approximately 3%.
Okay, well, I think so. It's a downtick just under 24,700 on the indices as we begin this session on Thursday. Gautam Shah is with us, founder Goldilocks Global Research. He's joining us to take some questions on markets. Gautam, great to have you here. Thanks for joining us. It just seems the market's done quite a bit, coming back sharply, and everyone is now, of course, a little confused about is there more upside here broadly, or do we go into a bit of a tailspin of consolidation? And overall, the mood is not helping. I mean, you look at what's happened, worries around the Japanese bond market, US bond market. So there are these small, localized tremors, earthquakes, whatever you want to call it. Keeps popping up once, every now and then, keeping everyone on their toes. So it's not all clear in that sense. And of course, there is this big thing of tariffs. What's your sense, Gautam? Do you see a clean run, or do you see a much more fractured kind of path from here?
Good morning, Prashant. Mood not helping is actually good news because it keeps the bull market in check. I think we've handled a lot of local and global stress in the last few months, and the markets have come out with flying colors. The fact that you are at such elevated levels of 25,000 itself, I think, is a big win. I don't think many people in the market would have thought that we can come to such levels so quickly. And I do see bull market characteristics. I mean, if you look at the momentum, the participation, the way India has handled the news flow, local and global, I do believe that we are headed significantly higher. And, these issues that keep propping up from time to time, I think is quite normal because I think we live in a world where something has to happen on a daily basis. But the price action has been super solid. There are no concerns on the charts. The market is not even significantly overbought. In fact, in the last 1 week, we've just gone a little sideways after such a big rally. And you have immediate support at 24,500 and possibly 23,800, which is more of an investor support. So keeping all of these factors in mind, I do believe that this dip is a buying opportunity. And I do see the Nifty moving towards a level of 25,600 and eventually lifetime highs. And I do see a wave of outperformance for the mid caps and small caps. So I think one should be invested. Even the US market setup is quite solid, and we see those markets hitting lifetime highs as well. So I don't see, as a technician, I don't see any concerns on the charts, and I think the markets are in fine form.
Okay, so 2,500 is the immediate stop. Then all-time high levels, mid and small caps outperform. You spoke about US markets, Gautam. And I see Goldilocks has done a lot of research on the US markets. Your first big picture report for the US pack is out. So tell us a little bit more about the US markets, because overnight they went into a tizzy following the surge in bond yields. So that is emanating as a bit of a concern. So considering there are linkages between what happens in the US and back home in India, what's the call on the US markets? Top down.
Yes, Reema, so we closely track all the US market indices, the ETFs and the top stocks. And I think since we have a product there, I think we now have a better understanding of what's happening in the US. And, after the Trump talk and the fall that we saw, again, not many people globally would have thought that US markets will come back so strongly, and they have. So I think the men have been separated from the boys, not just India, but world over, including the US. And I do see the S&P 500 moving towards a level of 6150. In fact, even the Russell 2000, which tracks the mid caps and the small caps, is coming back really well. So I think globally, I don't see a problem. I mean, even if you look at Europe, markets like London, Germany, France, all very strong. Asia has been relatively strong. Look at Taiwan, look at Singapore. So I think globally we remain in a bull market. That's what I want to call. I know it's very early to call for a lot of people, but the characteristics globally suggest that we are in a bull market, and this is only going to help India, which anyway has a lot of standalone positives.
Okay, all right. Ooh, the Nifty actually, as we speak, it's actually drifting lower. We're at around that 24,600 mark, which incidentally is one of the important support zones. So this 24,500, 24,600 is the important zone. Hi, Gautam. Good to hear your comments. You're sounding quite bullish on global equities and India included. What about the Nifty Bank? That's been the leader, right? I mean, it saw a lot of selling, the FI selling, it underperformed for a period. And then when it found its form, well, it took the Nifty higher. What's your take?
Yeah, I think in the difficult period of October to March 25, the Bank Nifty actually did not go down as much as the overall market. I think that was the key takeaway, that the banks have inherent strength. And thereafter, Bank Nifty single-handedly, took the Nifty higher from levels of 50,000 to about 56,500. It's consolidated beautifully in the last 10 to 15 days. It just passed on the baton to some of the other sectors. And you might have noticed how technology, metals, capital goods, real estates, FMCG started to do well. But I think this breather phase for Bank Nifty is likely to end. And once the level of 56,000 is cleared, I think Bank Nifty is headed towards a level of 60,000. And when I see all the top stocks, I remain quite encouraged that they will do well. But one thing is very clear, that the movement or the outperformance is now shifted to some other sectors. And I continue to believe that metals will be one of the star performers of the next 6 to 12 months.
Metals will be one of the, I think it's a view that you've had in the last time we spoke as well. And out of the pack, you'd recommend buying a bunch here on the metal side, or anything in particular, Gautam?
See, a couple of days back, the metals index hit the first resistance of 93.50. And I think once that number is taken out, you are heading towards a level of 10,500. That's about 12% upside from where we are. And typically the iron and steel producers are the ones that we like the most. But I think everything will be a beneficiary. We've seen in the last 4 years that when a theme works, everything does well. And that's what is likely to happen with metals. So the top 6 or 7 names across the board, ferrous and non-ferrous metals, I think will be an outperformer. See, the Nifty is not going to give you supernormal returns from here. You have to be in the right themes. And I think real estate, PSU and metals are 3 pockets which I think will see serious outperformance.
3 pockets. You said real estate, metals, and the other one is?
PSU. I think PSU, after a mega run for about 2.5 years, went through a consolidation for about 8 to 9 months. And I see the entire basket coming out beautifully in the last few weeks. And I think there is clearly a lot more money to be made there because valuations are comfortable. These are companies that don't have anything to do with foreign soil. And I think the structure is beautiful after that, initial run up. So I think PSU, given all of these factors, stands out for me for the next 6 to 12 months.
So PSUs in banks, are you talking about defense? Are you talking about power, oil and gas, and any stocks or any trades?
See, I think it's going to be across the board, even though we love the top 3 PSU banking names. So I think that's one focus area, the PSU power names, the PSU infrastructure names, and the PSU oil and gas names. These are the pockets that we like. Defense and railway, I know they've done very well in the last 15 days, but I don't think the risk reward is justified to go long here. But apart from these 2 pockets, the entire basket of PSUs, including the PSU metal names, I think will stand out.
Okay, all right. What about Reliance Industries, Gautam? That's like an index by itself. And that went through a big period of underperformance and bounced off that 1100 odd mark. And it's done quite well from there. Any view on this one?
Yeah, I think it's good to see that the underperformance has at least ended. It tested a level of about 1110. From there, we've seen a 300 rupee rally. Structure is looking a lot more comfortable. But will Reliance see major outperformance here? The answer is no. At the same time, it's not going to fall much. So I do see a gradual move up on Reliance. And, if you have 3 big pockets of the market, which is banks, IT and Reliance, all having good setups on the charts, you can't have the markets go down too much. And that's the reason I feel at today's level of 24,600, the market remains a buy risk reward.
By the way, sorry.
I was mentioning that IndusInd is
moved in the green.
The green. And this is what I was saying in the morning. I mean, if you look at the last 1 month, there's been so much bad news where the stock is not selling off. Everything has been, and there's been a lot of supply. All of it has been absorbed without breaking the price. People still hopeful that, it's just a valuation game that you're buying something which is now beaten down, depressed, and maybe there is some money to be made from here. So we'll see. You, of course, heard, Digant, who thinks it's largely going to be a trading game. 600 to 800 was his range broadly, but doesn't really, do very much point to point a year down the line. Of course, Hetal was also with us in the morning on IndusInd. 210 lower on the Nifty is what you have. On real estate, Gautam, what are your picks?
Again, I'm sticking to the top names. I think real estate is a structural trend for the next 3 to 5 years. That's the way I want to look at it. Went through a nice 1 year of consolidation. If you look at DLF, Godrej Properties, Oberoi Realty, Brigade, Prestige, Shobha, all went through a large consolidation in the last 1 year. And they all seem to be creating a foundation for the next leg up. You can't play India and not play real estate. I think it's a direct proxy to the India story, which banks were for a long period of time. So I think given the valuations, given what I'm hearing on the ground, what I'm hearing from many of my clients, I think real estate from a risk reward perspective stands out, and the index could actually see a 20% appreciation from these levels.
Gautam, great conversation. Thank you very much for joining in. The Nifty, though, is still down close to about 200 odd points, even as IndusInd Bank has recovered back in the green. Some of the drags include IT. In fact, IT is under severe pressure. Tech Mahindra, HCL Tech, both down over 2%. And then you've got ITC too, weak. But let's talk about Uno Minda's Q4 performance. The company reported largely an inline set of Q4 earnings. Switches lighting segment continued to see growth of more than 20%. Management expects business to grow more than 1.5 times the industry growth rate. To talk about the performance, Sunil Bora, Group CFO of Uno Minda, is now with us on the show. Thank you very much for joining in. While margins are still on the whole within your guided band of 11% plus or minus 50 basis points, in Q4 there was a drop of 100 basis points in your margins. What led to that? And do you think you can increase what's the guidance on margins going ahead? Do you think there is scope to, for margins to cross 12% in FY26?
Yeah, so first, you mentioned that from year-to-year perspective, there is a margin softening of almost 80 basis points. And that is primarily because in the last Q4, we had some good price settlement with some of our customers which were delayed. But as we have guided, our overall profits have been within the range of 11% plus minus 50 basis points. And that's the guidance we are maintaining for FY26 as well. The key reason being, even though we are expecting growth and we are not able to see the benefit of operating leverage in our bottom line, is primarily because we are in a very high growth phase. We have multiple plants, businesses which are under startup phase or under phase where they are in the construction and will come into operation phase in the next fiscal year. So as you know, any new business or any new plant we start, normally you will have a lot of startup costs, and initially you are into ramp up phase. So first year or two are actually in the investment phase where you don't get any returns. In fact, first year you might be actually in negative zone, but gradually you ride the growth phase, and once the plant stabilize, our target always has been in the third full year of production, we should achieve our guided profitability or targeted profitability. So that 11% plus minus 50%, 50 basis points actually factors in all those startup costs and initial ramp-up costs. And despite that, we are able to hold on to our margins. So if you exclude that, actually we might be improving our profitability if you see on apple-to-apple basis.
Hi, Mr. Bora. Good morning and good to see you in. Nigel on this side. Well, India and UK, they have recently signed those FTAs. And even India as well as the US are likely to announce at least the first part of the bilateral trade deal. You have talked about additional opportunities, right? Do you see signs of that? And could that be a potential benefit for your company from the UK-India FTA?
Absolutely, Nigel. From UK-India FTA, as of now, we have not been having any significant exposure to UK. But we do hope as things stabilize, as the taxes comes down, we should gradually become more competitive. But coming to India, US, we have good exports, even though it's overall pie, it's not very high. Our revenue from US markets is less than 2% of our total revenues. But we do remain optimistic. We are seeing positive traction, discussion with our customers. And we are cautiously optimistic in terms of the discussions going on between the two nations. And hopefully, whatever we are hearing from the government in US or the officials from the US, there seems like the auto component sector or the tier 1 sector might get good relief for imports into US. So from that perspective, we are seeing very good traction. And the discussion with our customers are in a positive zone in terms of maybe increasing our businesses as we move forward.
Sunil, hi, morning, Prashant here. And good to speak with you. You can't put numbers. It's too early, right? You can't put any numbers to it in terms of what it could mean. Volume of business going up. It's too early.
It's little early, but Prashant, I can tell that even in the current phase, before this 90-day pause, obviously we have been in discussion with our customers, and the feedback we have been getting from customers was positive in terms of the business continuity and expansion of that business also. We are in the process of evaluating few more RFQs which customers have issued to us. So hopefully, as we move forward, in absolute terms, the revenue from that region, we do expect to go up. Yes, it is tough to put numbers on the table today, but we don't see any significant degrowth from that perspective. In fact, if at all, we are looking at upside only as we move into the near future.
What about Europe? That is UK, but what about Europe? I think here there are still headwinds, right? Cheaper imports, higher production costs, and of course, generally, it's just been a sluggish demand environment, region-wise.
No, you are right, Prashant. Region-wise, the volumes are significantly lower. So we have like both sides of the coin. We have a couple of key businesses there, one in Spain and one in Germany. So the Spanish business obviously is a horn business which is facing challenge because that is directly linked to the vehicle volumes. Even though we have not lost any share of business, the volumes are significantly down, and that is what is showing up in our numbers as well. So like last quarter, our revenue from those operations is down by almost 25 crores in the quarter. But in Germany, things are looking better. Even though the volumes are down, we are looking at some new businesses which we feel will be able to more than offset the volume drop or the impact of the volume drop. So as of now, it's industry-wide, if you see, yes, volumes are lower, but we are looking at optimistically in terms of new business additions.
Sorry, what's the contribution of Europe and what's the extent of pressure?
Yeah, so in terms of revenues from Europe, from our Clarton Horn subsidiary is something around 400 odd crores of revenue, and same broadly number is from the German business. And in terms of volumes, the volumes are down almost like 10 to 15%, which is what is mirroring in our Clarton Horn revenues.
Okay. Can you give, Sunil, some more color on your various divisions like switches, lighting, castings? What is the growth that you anticipate? What are the trends that you're seeing for FY26?
No, you are right. So if you see, a lot of our businesses do continue to ride on the premiumization theme. If you start with switches, we continue to hold on to our lion's share in both the businesses, be it the four-wheeler switches or two-wheeler switches, both in more than 50% market share. We are seeing a lot of upgradation in the switches, be it the haptic-based switches, touch-based switches, a lot of premiumization happening in that. We are also gradually increasing our share of exports into those businesses. If you see alloy wheel, yes, alloy wheel last year has been, in terms of application ratio, has been almost stable. So application ratio, when we say it is like alloy wheel versus steel wheel. So it has been almost in between 40 to 45% range for last couple of years. But globally, if we see, it is more than 80-85%. So India obviously will ride that journey, but it might not be in a short time frame. It might take a few years. But maybe last year was our consolidation phase. And in terms of tool alloy wheel, we have consistently been expanding our capacities in line with what we have done in four-wheeler wheel. Two-wheeler wheel, we have grown from 6 million wheel now to 8 million wheels, which is fully operational and fully booked. We have announced another 1.5 million wheel capacity in Bawal. So we are consistently expanding our capacities, and there is a good demand we are seeing in the alloy wheel segment. Moving to some of the other segments like lighting, you said lighting has been one of our very strong growth area, which we have been able to successfully increase our market share in last couple of years, specifically in four-wheel lighting. Even in two-wheeler lighting, we are almost like 30% market share. So things are looking much better, and there is a lot of focus on innovation, technology, R&D, etc. In fact, recently we have also opened a new tech center in Czech Republic to support our four-wheel lighting business. So there is a lot of action happening on all that. And if you see from growth perspective, and our target has always been to do at least 1.5x of the industry growth. And if you see last year, we have done industry grew over by 9%, we grew by 20%. So that clearly demonstrates our commitment, and we do hope that as we move forward, we should be able to deliver at least 1.5x of the industry growth based on all these factors which I just spoke about.
Okay, all right, Mr. Bora, very quickly, before we let you go, could you tell us what's the current content per vehicle? What's the difference between, say, an ICE as well as an EV? And where do you see the content per vehicle number headed?
So content per vehicle, if I see broadly in the two-wheeler segment, currently stands roughly around 12,000 rupees for ICE and roughly around 35 to 40,000 rupees for an EV two-wheeler. And in terms of PV, it ranges very, very widely. So if you see, it is for the top end almost like 2.25 lakh for a D segment car for ICE engine, and for EV, you can add another roughly 1 to 1.5 lakh rupees of kit value on top of that.
All right. We have Sunil, thank you very much. I think that's a fair bit of detail, and look forward to our next conversation. Thank you indeed for joining us. Let's focus on the next company, which of course has been in news, with the news flow actually taking a bite out of the stock price over the last 3 days. Protean eGov Tech is the company in focus. Of course, the news was that they've not been shortlisted for PAN 2.0 by the IT department. The market did not take the news flow too kindly. But they've reported numbers now as well. Suresh Sethi is MD and CEO at Protean eGov. Mr. Sethi, good morning. Great to have you with us here. Prashant this side. So let's just start with that setback in that sense. How do you, so let me ask you, and I think you, in that conference call to analysts, you did explain that you don't see that as a bit of a setback. Why is that? What is the difference between what the PAN work that you are doing and the scope of work for PAN 2.0 why would this not really sort of take a bite out of the growth for future years, which many were building in? Go on.
Sure, Prashant. I think it's critical to understand the PAN application process. So there is basically when an applicant is applying for the PAN card, there is the complete collation of data, and securely transmitting to the ITD. So today as Protean, we run multiple online and offline channels. We have a well-regulated network of almost 400,000 agents at which a citizen can go and submit their information or submit information for updation of a PAN card. And this is transmitted securely to the IT department. The IT department today runs the system through which the allotment of the PAN number is provided. And once they allot the PAN number, then the same is given back to us and we issue the PAN card and we send it to the citizen. Now, the entire tech stack which is used for allotment is a system which is run completely by ITD. And that is something we don't even do today. We run largely the processing and the issuance of the PAN card. So we don't see the two being sort of, on the same track. And while it was critical and a excellent opportunity to further deepen our relationship with the IT department, our current business continues as is. And equally important is the fact that the PAN 2.0 from deployment or allotment is going to be another 18 months journey. And it will be looking at online channels at that stage.
So in a way, it's like what TCS does for the passport service, right? That's what you do with regards to PAN.
You can make a similar analogy.
I mean, I'm just trying to simply, that's much better understood.
And Prashant, just to add over here, it's also critical because it's a citizen-centric service. Today, a lot of citizens, actually 70% of them still go through an assisted mode. These are digital non-natives who absolutely want some support to be able to apply for a PAN card. And therefore, the network becomes very, very critical and important to support them.
Mr. Sethi, what was the reason that you were not shortlisted?
We have sought a clarification from the IT department as of now, and we await to hear from them.
Do you think it's technical in nature, or would it be something else? I mean,
no, there are basically 3 rounds of, if you may, a qualification. There's a pre-qual, there's a qualification, and there's the price discovery at which multiple bidders go in and there's a fair and transparent way of discovering the price of the project. This was at the qualification stage where along with us, the other competitors have also been in a way indicated that they didn't make it to the last round, and one final competitor has made it to the last round. All this information is available on the GEM CPP portal.
So which is the company which will now be doing PAN 2.0?
It is available on the portal yet because as of now, they still have to do the price discovery round.
What's the scope of work, Mr. Sethi? What's the size of work here?
The scope of work is basically revamping, deploying, designing and integrating and maintaining the core IT systems, which, as I mentioned, are being run by the IT department themselves as we speak.
Can you put a number value to it?
There was a budget shared by the government, which is there in public domain. It can always be referred to.
Can you, since we have you, it's easier to ask you. What is it possible for you to share that?
It was indicated as a 1400 CR budget.
Over what period of time? This is like So
as I mentioned, the design and the deployment of the stack is supposed to be done in a period of 18 months, post which there'll be a maintenance period for the same stack.
Okay. So today, PAN is 50% of your revenues, right?
Yes, almost.
Okay. And for the next 18 months, it's business as usual.
I would say that the service...
Or will there be a drop-off in revenues?
Exactly. So service models, as we see how they evolve down the line, because as I mentioned, we today also have online and offline channels for people to apply for the PAN card. But 70% of the people go to our assisted points of service where we run a regulated network of almost 400,000 agents covering the country. We don't know what the service models will evolve in a couple of years, but largely will be driven by the citizen's choice of how they want to apply for a foundational ID like PAN.
Okay, but just, simplistically, for the shareholders, revenue will continue to drop off and come to zero, say after 18 months. And after 18 months, what is your own expectation?
No, so again, I'm reiterating, 18 months, the new stack does not come into play. Down the line, also, as I'm saying, we don't know the service models, how they will pan out. Today, citizens do take assisted services. 70% go through that mode. And we expect it will be driven by the consumer choice. So the distribution and the issuance business is separated out from PAN 2.0 and what it will bring at that stage.
All right. Hi, Mr. Sethi. So clearly this 50% of your business has gone into a bit of a tailspin and there is some uncertainty out here. Now you'll have to try to fill in the gap, right? What are the avenues you are looking at both domestically as well as internationally to fill in this gap? If you could tell us that. And
first of all, let me say there is no gap. As I mentioned already, The PAN 2.0 talks about the revamp of the core IT systems of ITD, which we don't do today. What we are running is the distribution for collating the PAN data or PAN updates and transmitting it securely to the IT department. We today also have both online and offline channels to do it. So our business continues as is the mandate given to us by ITD in 2003.
So you'll continue to grow then? Because the street is clearly not buying this. As you have said in the last con call as well, you said that business will not be impacted, but the street is very, very nervous. You're looking at a couple of sales notes out here. I'll tell you what's the problem. The problem is on 50% of your revenues, that was the cash cow. So if you were to get into new verticals, the street was positive on that. They were expecting you to get more business out there. Suddenly that goes out of the way. So if you're saying it's not going to impact business, do you expect to grow from here on?
No, so absolutely. As we see, PAN is not a saturation ID. We are seeing new PANs getting issued up till 6 to 7 CR every year. And we have almost a 57% market share. We gained 5% market share during the course of this year. So we expect this business to be aligned with the issuance of PAN. And citizens today, if you may, only 35% penetration of PAN is there in the country. It's not a foundational ID, the lines of Aadhaar, which is 99% penetrated. Yeah. So there is a huge headroom over there for new PAN cards to be issued.
All right. If you could help us out with the growth guidance then?
So definitely, as we've been saying earlier, we expect 6 to 7 CR PAN cards to be issued. We currently have...
Revenue growth guidance, sir. As a company, what kind of revenue growth can we look at?
Yeah, so as you were saying, we are looking at other areas, goes without saying. So we have clearly gone into multiple open digital ecosystems. We are working in the space of agri, health, digital commerce, ONDC. Likewise, we are introducing products on top of our identity services business, eSIM Pro and Rise we've spoken about. So we clearly see a good trajectory for the company in new businesses, and the core businesses remain strong, including the pension business, where we have a 97% market share as of now.
Okay, just a couple of more questions. In the last quarter, there's a big jump in other expenditure. Any one-off was there?
No, there's no one-offs.
No one-offs. Okay, all right. Because there's quite a sizable jump, even if I look at it on a sequential basis. Also on ONDC revenues, could you tell us what is the outlook out there? It seems that, it is plateauing at around 7 million per month. But you were optimistic on that, right? So what was the revenue in the last year, and how do you see that panning out?
Yeah, sure. So there are two parts to the revenue that we accrue from the ONDC business. So one, we are running the foundational gateway and registry, which today, as we mentioned, is directly compensating by the ONDC as an entity. And that is where the network play comes into play. And this is foundational. The other area where we were looking at was a SaaS sort of a business model where you are creating the demand and supply applications. Now, the demand and supply applications clearly get linked to the fact that as the network grows and there is more consumption, you will get paid for every transaction. So we hope, as we've seen, that ONDC is gaining traction. There has been growth, but clearly we have to hit an inflection point, and the SaaS revenues are what will pick up from here onwards.
What was the revenue, though, for the past year?
So the past year, we had around 8 CR of revenue coming from the core stack, and the revenue coming from the SaaS business was pretty limited at this stage.
Mr. Sethi, you've approved a scheme of demerger, right? Protean Infosec Services. Could you tell us what does the subsidiary do, and what is the logic behind this?
So initially, we had established a subsidiary to look at our Infosec vertical. We are clearly also looking at aligning and coordinating that business with our cloud services business. We find a lot of alignment in that business because, end of the day, any cloud deployment involves a lot of cybersecurity and security-related considerations. So we are bringing the two businesses together to take it as a common business to market.
Which two businesses?
Cloud services and Infosec.
And what is Infosec exactly?
Infosec is information security, to running any SOC centers, doing the VAPTs, doing various sort of services for the consumers in the space of containing any security threats on the Infosec perspective.
Okay, just one last question. You said there's only for PAN issuance, penetration is still quite, you said 35%, right?
That's right.
And 6 to 7 crore PAN cards to be issued over what period? This is an
annual figure we generally see, because that is what we've been seeing as the run rate for the last few years.
And you're able to do this without, you'll do this in FY26 as well. I mean, it should be in this ballpark.
Absolutely.
Okay, all right. We'll leave it there. Thank you very much, Mr. Sethi, for joining us and answering all those questions. And, look forward to when you get to know, as you said, you've asked for a clarification. Do let us know as well in terms of what led to you not qualifying for that PAN 2.0. So we'll look forward to that. Thank you very much. We'll take a quick commercial break here. Gokuldas Exports is going to be with us on the other side to talk about their fourth quarter performance and, of course, the outlook forward. Stay tuned.
Welcome back. More earnings interactions. Gokuldas Exports reported a good performance in Q4 and FY25. Top line growth was about 25%. Siva Ramakrishnan Ganapati, Vice Chairman and MD of the company, is now with us on the show. Thank you very much for joining in. 25% revenue growth year on year, 3% on a quarter-on-quarter basis. On a year-on-year basis, what was the impact of the acquired entity? And going ahead in FY26, what's the outlook?
So the acquired entities have started performing well, and between Atraco and Matrix, we had about 850 crores plus another 450 crores. So about 1,300 crores come from there out of the total 3,900 crores. So that's the kind of split of revenue coming from the acquired entities. All of the entities have grown. The base business itself has grown substantially, where the erstwhile Gokuldas itself has grown pretty strongly, both in Q4 as well as for the whole year. And we have been growing at a much faster pace than the rest of the industry.
Okay, all right. Hi, sir. Good to see you, Ben. Just to clarify, one acquisition that you made was BRFL, right? That hasn't yet contributed in the past year.
No, we have just made an investment. We have not acquired them as yet.
Not acquired.
Them. That's right.
All right. So got that. Now, if you could tell us what is the current order book, if you could give us a brief idea, because that gives us some kind of visibility going ahead.
So the order book is strong, and we have booked all the way till the second quarter. So we have a fairly good amount of order flow happening. There are certain concerns from the customer side with tariff and uncertainties, etc. But we seem to have been overcoming that and generally having a reasonable state of booking. So we don't have as much concern, though. I feel that in the longer run, I think given the macroeconomics and the geopolitics that is going on, India should be in a stronger position, especially with UK FTA happening. Hopefully, an FTA with EU and US also, tariff agreement being reached. Then we will see better traction. In the interim, in the short term, tariff may play havoc with short-term business. We will have to just deal with it. We will have to, contend with those uncertainties and manage the business through that period.
Okay, all right. So, the last time we spoke, you said that India is better off if you compare it with other countries, China, Vietnam, Bangladesh as well. Is that still the case? Given the sudden talks between China as well as the United States, has some of our edge got taken away?
So China, it was impossible for China to export anything to US when the tariff was at 145%. Now that it has come down to 130%, there is some trade resumption between China and US. Having said that, a 30% tariff is still high, and we will definitely have an advantage over China. But what's important to see is how does the tariff eventually play out for other competing countries like Vietnam, Bangladesh, Indonesia, etc., because that's where bulk of the larger customers have pivoted already to. So the relative tariff post this 90-day pause window is what will determine, in the longer run, who will have what advantage. At the moment, there's a level playing field for everyone in this Asian region, barring China.
You had guided for improving EBITDA margins to 12%, and I think you've achieved that. Now going ahead, what is the outlook on EBITDA? Can you further increase it? And considering you get about 70-80% of the, your revenues from the US, and there are going to be tariffs to some extent, what are your conversations with customers like Gap, for instance? Are they asking you to bear a part of the impact?
See, all customers are asking us to bear an impact of the tariff. So in the short term, which is say the first half of this year, when the tariff will be in play. For example, the revised tariff or reciprocal tariff started from April 9th. So it's impacting Q1. So we do have to share some amount of our margin with our customers. The supply chain contributes to bearing the tariff as well. So in the interim, to keep up our relationships and to make sure that we continue to grow, we will have to forego some margin. So Q1 and Q2, we will have some, setback on margin. So this year will have some tariff-related challenges. If I exclude that, I don't see any problem for us. We will continue our growth journey both on top line and on the margins. But tariff will certainly impact our margins. Tariff will also bring in volatility of business volumes. At the moment, we don't know what the tariff is after July 9th, after the 90-day pause window. So will it go back up to the 26% announced earlier? Will it stay at 10%? Most of the customers who are placing orders today will receive their goods after the tariff pause window.
Yes.
So how do you place an order now without knowing clearly what is the tariff at which you're going to clear the goods when it comes into the United States? So this is a big concern, and that brings in a short-term volatility. But, we are building the business for the long term. And when you look at the long term, we don't seem to have those kind of concerns. In the short term, we definitely will have this problem.
So say for H1 of FY26, what's your own expectation of EBITDA margins?
It's very difficult to predict. I'm sorry to say that because I don't even know what's the tariff going to be in Q2. So how can I predict that margin? How do I know what kind of burden share that we are talking about in the second quarter? Our endeavor will be to protect our margins as much as possible, but we are living in an uncertain times where we don't even know what are going to be some of the tariffs. So it's hard to predict margins in such an environment.
Fair enough. Okay, but you are sharing some of the burden with your customers, and that could keep your margin subdued. That's the key takeaway from that. Okay, you'd also spoken about a 15% kind of a revenue growth driven by a strong order book, sourcing trends, etc. Is that on track?
So again, long term, 100% it's on track. Short term, there will be some aberrations. When I say Q1 and Q2, there could be some order flow hiccups, primarily because customers themselves are unaware as to how the tariff is going to impact them, and hence how do they go and build up their inventory. So if I buy now for holiday season, which is the winter season, most of the production will happen in Q2 of our financial year. What is the tariff?
So orders have been paused, sir?
Orders have not been paused. Orders are coming through, but the brands are just concerned about the order flow. So they may trickle it down. I don't see an order flow problem, but I see some volatility again because of unknown tariff.
And ROCE, you had plans to, I think, scale it up to 20% plus.
Yes.
When does that happen?
I think it'll take 2 years, and it will happen. One of the reasons why ROCE is showing a slight dip now is because we have made investments in several capexes, capacity increases. So we are also trying, filling up those capacities. So planning to do that, and those have yet to come on stream. So these are all capital work in progresses, as well as our investments in the textile unit BTPL. Has contributed to capital outlay, but we are not counting any benefit coming out of it. It's just an investment. So ROCE will improve as we progress. I think in FY27 we should start seeing a fairly strong ROCE again coming back to us.
Pleasure talking to you, sir, as always. Thanks a lot for joining in. Hopefully next time around we'll have further clarity with regard to what's going on in the globe, and you can give us some more concrete guidance on the path ahead. Thanks a lot for joining in. For the time being, let's focus on Interglobe. The company reported a rather strong performance in Q4, backed by festivals, your weddings and the Mahakumbh as well. That's what took the profit number beyond the 3,000 crores mark. But to discuss what went on in the past quarter, how they see things moving ahead, we're joined by Mr. Peter Elbers, the CEO of IndiGo, who joins us on the show. Hi, Mr. Elbers. Thanks a lot for joining in. Well, it's a sharp jump in revenue is what we're seeing. Could you give us some kind of a breakup? How much of it was led by the Mahakumbh? What was the increase in flights? And do you expect this now to fizzle out?
No, I think we have to look at what's the underlying assumptions we use for India. And with the growth of the economy and the growth of the GDP, we have set a long-term objective by doubling in size between 2023 and 2030. And that means we expect to have a significant growth year over year. Then in the year itself, we always see stronger quarters and weaker quarters. So if we look back to FY25, we saw, for example, that Q2 wasn't great. There was the elections, there was the heat wave. There were a couple of factors which were kind of dampening the growth. What we see then the quarters after that, and Q3 and especially Q4, were kind of picking up a lot in that traffic. And then, of course, indeed, specific events like the Mahakumbh create some extra traffic and extra demand. And IndiGo has operated quite a few additional flights to Prayagraj and other cities in UP. But that in itself is, in fact, a reflection of the overall demand and positive setting. And yesterday, I think the DGCA released their numbers for April, and even April came in at a solid 9% growth of the market.
Okay, all right. Let's talk about FY26 then. Could we expect double-digit growth coming in FY26?
For FY25, we've given a capacity guidance in the early double-digit growth. That's the capacity guidance we have. Obviously, with an 87% load factor as we had in last year, that capacity guidance should not be too far off from the traffic guidance we're giving to the market. So again, early double-digit is the capacity guidance we've given for FY26 going forward.
Peter, hi. So Q4 has been good, very good, but the street is concerned about Q1, right? We had Operation Sindoor, a lot of people canceled their flights. What was the financial impact on the flight cancellations, on your network schedules? And how do you generally look at how have the months of April and May been for you?
Well, if we look to Q1 and the 3 months in Q1, let me just look at these in kind of separation. So April, we just mentioned, actually the quarter started very good and pretty much in line what we had seen in the months prior. So April was a good, as I said, 9% for the overall market. Then obviously May, and that includes, by the way, clearly the attack at the end of April, which was already there. Then clearly May had a dampener. The impact in May was for us 8 days, a closure of 11 stations and a total of 170 flights per day. That's a significant number. But then if I look to the overall operation of IndiGo, we fly 2,200 flights a day. So if we take out 170 flights, it's still a relatively limited percentage of that. The same goes for the overflying limitations for Pakistan. We had to close or suspend rather 2 stations in Central Asia, Tashkent and Almaty. And we have another 34 flights which have somewhat extended flying times in the network. So the overall impact of that is relatively limited. And clearly what we have done is we reallocated some of our flights to the southern part of India and basically are growing from there. Post the ceasefire, the flights have been reinstated and all the 170 cancellations have been reinstated by the end of last week. And we're sort of back to a regular operation. That clearly has an impact on May, but again, it's more in the single-digit range when it comes to capacity impact. We have seen a drop in bookings, as we just shared also in the call. But that seems to have bottomed out. And actually, we see now the first signs of people picking up bookings again. And the resilience of the market is actually quite strong. And we expect, therefore, June to see again a performance which is more in line with the situation prior to May rather than the situation in May.
All right. What is the current outlook, though, for forward bookings as well as the fare trends for the upcoming quarters?
We have not adjusted our capacity guidance for the year. We've actually just reiterated the early double-digit capacity guidance for the entire year. We have reiterated our capacity guidance for the first quarter. Again, slightly lower because of the cancellations in May, but we have reinstated all these cancellations after these 8 days of cancelling, and basically we see the traffic coming back. So for us, no change in planning and no change in expectation or outlook, other than the month of May, which of course will have some impact on the overall profitability.
Got that. So April will be a bit of a subdued month. Can you take us through how was the air traffic and the yields and the outlook on the same?
If we look at the year which has gone by, the 4 quarters had a very distinct operation in terms of demand and even with that performance, and of course the price of the fuel also had its impact on the overall profitability. The last quarter had a very strong demand also in terms of yield. Quarter 1 and quarter 2 are traditionally weaker quarters when it comes to demand, and clearly quarter 3 is also always very strong with Diwali and the festive season in that. So I don't see any reason why this year would be very different as compared to previous years in terms of demand. What is adding actually to it is that IndiGo is continuing its path on further internationalization. So we have stepped up significantly our number of international destinations. We're now into 41, and actually as recent as today, we announced the open for sale flights into Manchester and Amsterdam, operating out of Mumbai and starting in the first week of July.
Give us some more details on a couple of other aspects. Could you provide us with an update on the codeshare and the partnership with the Turkish Airlines? The lease is up for renewal on the 31st of May. So I asked you this.
I think it's important to recognize that flights between countries are governed and by what is called air service agreements, and that's agreements between the respective governments, and the same is in place obviously between Turkey and India. There's an air service agreement, and IndiGo is operating within the guardrails, if you wish, of that air service agreement. That's one. 2, IndiGo is operating in full compliance with the operation mandates and guidelines and opportunities and restrictions which are there by the government. And thirdly, importantly, we've had thousands of IndiGo customers booked on those flights. The majority, by the way, connecting over Istanbul and connecting to other places. And we just wanted to make sure that we continue the operation, serving our customers, and making sure that they can either go to their destinations or come back from their destination in the light that we had so many bookings. When it comes to a review of the permit, we await the outcome of the government and we will operate accordingly.
Okay, but in the event the lease doesn't get renewed, then what is the impact on your earnings?
Let me put it in perspective. IndiGo operates a little short of 2,300 flights a day. That's the IndiGo operation. We fly 2 times per day back and forth, so that's a total of 4 sectors to Istanbul. So 4 out of the 2,300. Then obviously these are larger planes, so you can move it a bit up in terms of percentage, but the overall scope is 4 out of the 2,300 daily flights we're having.
All right, final question before we let you go. Crude oil prices have been trending lower. How would this impact IndiGo's margins, considering fuel accounts for roughly around, I think, 40% of the operating cost?
Well, thank you. Well, cost is, of course, an incredibly important part of the basis and foundation of IndiGo, and maintaining our cost leadership in the Indian market, being such a highly competitive market, is incredibly important for IndiGo. And I guess we have demonstrated over the many years that IndiGo has been able to maintain that cost leadership. And that, by the way, will also help us now in the international arena where competition is different. And clearly we should also have and maintain our cost leadership. The price of fuel obviously is an important part of our cost, but in the long run, the correlation between ticket prices and fuel prices is always there. And it may not be immediately in the quarter, or maybe even not 2 quarters, but over time that correlation is there, because if fuel prices will go up substantially, it will have its reflection on ticket prices for companies just not to go out of business. If you look to the outlook for 26, I cannot do much more than repeat what some of the sort of international agencies are expecting in terms of a environment which is likely not to change. But I guess we all know that this can change pretty much overnight if something unexpected happens. And if I were to be in a position to make an accurate fuel projection, I guess I'll be doing something else than running an airline. So against that backdrop, we keep the agility. We have the youngest fleet, and with that, a very fuel-efficient fleet. So I think Indigo is very well placed to, in case fuel would rise, to have the adequate planes for that. And if fuel remains at this level, to continue to operate with very attractive prices for our customers.
Peter, great conversation. Thank you very much for joining in. The Nifty still down about 1% in line with the cuts that we're seeing across the Asian market. IndusInd Bank, the expectation was that perhaps it's going to be, it's going to be under severe pressure in the morning. But look at the way IndusInd Bank is now back in the green. Top Nifty gainer, 3% up, 3.25% up on IndusInd Bank, and very close to that 800 rupee mark. So swift recovery from the opening lows on IndusInd Bank. Outside of that, in the frontline pack, you've got Colgate weak, 5.5% down on the back of numbers. Oil India is reacting to the decline in margins. Oil India has a cut of nearly about 4%. Dixon sees pressure for the second day in a row. It was the earnings miss of yesterday, down 5-6%. Another 3% gone on Dixon Tech. On the way up, it's IndusInd Bank. We spoke about Nalco, Prince Pipes. That's been one of the mid-cap stocks of the morning. Soni Patnaik is now with us on the show from JM Financial Services. Soni, on expected lines, we've had a big gap down. Now, what would you advise for trade?
Good morning, Rima. Thank you so much for having me on the show. See, I think Nifty may slide down towards its 20-day EMA support, which is around at 24,350 odd levels. And maybe, that's the level from where a bounce back or a buy on dip sort of a structure can get formed. But as of today, 24,650 to 24,700 is seeing multiple resistances, and the expiry could just be below these levels. So only the resistance is taken out. It may retest 25,000 again, but as of how the call writers are placing themselves at higher strike prices, possible that Nifty slides down and the profit booking continues for the day before seeing any, sort of a good buying back from those levels. So it's advisable to stick to stock-specific strategy, and a balance of both short and long side can be seen for the day. The first buy recommendation comes in Indian Hotels, which is approaching its 20-day EMA hurdle. It has seen a very strong bounce back above its 200-day EMA. So I think the stock does not sustain historically below the 200 EMA. Bounce back is quite strong from those levels. One can buy Indian Hotels at current levels for targets of 790 to 800, keeping a stop loss of 758. That can be seen. The second idea is a sell recommendation, which is an official recommendation that we've shared today with the clients. It's a sell in Grasim. So Grasim has seen a stock, a breakdown below 2,700 levels as per the option chain breakdown, and also below its 10-day EMA support. So one can sell Grasim futures with a stop loss of 2720 and targets of 2630 can be seen.
Thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to focus on commodities. Stay tuned. As promised, Manisha is now with us in the studio. Manisha, what's the one commodity that we should look at this morning?
Well, I'm looking at a couple of them, actually, and sharp gains overnight is what we are witnessing in both of these. One is an asset class, which is cryptos. Bitcoin is trading at an all-time high of 110,000, and we've seen prices gain up quite strongly in the last month or so. Actually, since the time 2025 has started, we've seen very strong gains continue into this one. But for the month of May alone, we're up by 15% for this. Well, it is the usual suspects which have led to a lot of buying in cryptocurrencies as well. It is the softer US inflation numbers that led strong buying, de-escalation of the US and China trade war, and then Moody's downgrading the US credit rating. All of that led to money flowing into cryptocurrencies. And then Coinbase joining S&P 500 was quite a watershed movement. On that day itself, we saw prices gain up quite strongly. But apart from that as well, when you look at the cumulative inflows within cryptocurrencies, and especially Bitcoin ETF, well, those have surged to almost $40 billion now. And then there is record liquidity that we also saw for Tether stablecoin. The US Senate has has voted now to advance legislation to create regulatory framework in US for stablecoins. That has been supportive for that space as well. And then the US president also has said that before the Congress goes for recess in August, he wants to see the crypto regulations ready to sign by August. So markets are really hoping for a lot to happen before the time that we see August ending there. This is what we've done in sense of month-on-month buying, in sense of many of those US public companies. For 2025, they have seen 31% increase in crypto holdings, so far standing at around $340 billion. Now, when you see that number, that is 15% of all Bitcoin available in the markets. So very strong buying coming in from the coordinated markets there. This is what we've done in the last 1 month in terms of cryptocurrencies. The best of the gains clearly coming in from Ether at 46% up, but the other cryptocurrencies, including Bitcoin, is 19% up, and 10 to 15% of gains is what we've seen in the last 1 month itself, with very high gains now being talked about in this year and the next as well. But the other thing that I want to watch and bring to the table is the silver prices. Very sharp gains into this one. For this week now, we are up by 6% for the silver prices. With that, we're trading at a 3-week highs as well. And the silver prices have been inching towards that 1 lakh rupees per kg market in the Indian space as well. The all-time high that silver has done on MCX has been 1,03,000, not too far away from those kind of levels. And the kind of breakup that we've seen come in for silver, the expectations are that you could be reaching that level pretty soon. Well, we have seen decline in US dollar index. There also is safe haven buying that we have seen in silver. Also, when you look at the China and the EU market, the photovoltaic or the solar demand for silver has been quite on the stronger side. Well, 2025 is a 5th straight year that you're looking at global deficit continuing in silver. Last year was industrial production at record highs. The markets are anticipating that we're looking at record industrial consumption for silver in this year as well, and that perhaps could be supportive. The targets that people are putting out for silver is a support of 30 or 32, but the upsides could be 38, 40, 42 as well for this year. So that's the kind of bullishness that silver seems to be carrying.
Thank you very much for that. Get into a break. On the other side, we'll have the management of DLF joining in.
Welcome back. Well, the markets are under pressure, but good times with the broader markets because the number of stocks advancing now has taken over the number of stocks declining. So more green on at least in terms of the broader markets. But let's focus on DLF. That's a stock on our radar. For Q4, they saw strong growth in bookings, collections, while launches in FY25 exceeded the guidance, but that was on expected lines. We have with us Mr. Ashok Kumar Tyagi, the MD of DLF, who joins us on the show. Hi, Mr. Tyagi. Good morning. Thanks a lot for speaking to us here on CNBC TV 18. Well, just to blend earnings, stock markets and the IPL, well, the IPL gives us a chance, right, to watch super cricket, but it makes the cricketers wealthier. I say this because Shikhar Dhawan, in this week itself, he's gone ahead and bought a flat in Dahlias for around 69 crores. Woohoo! How many units of Dahlias do you plan on selling, once it's ready? For this year, FY26, if you could give us a number. And I'm just going by these numbers and I'm Googling as well, 60 to, I think, 120 crores. The profit margin will be huge, right, on these flats?
Okay. So you have asked a lot of questions in your one question. So yes, I also read the news about Mr. Dhawan buying the Dahlia, which is obviously very good. So, Dahlias has a total of, I think, about 430 odd units. We have sold about 190 odd of them so far. For the next couple of quarters, the sales would be relatively more muted on Dahlias. But I think we expect that by the year end, we should have our experience center ready, which should be the sort of, the launch pad for the next phase of focused sale on Dahlias. I mean, we have put out a 4 to 5 year timeline for selling out all of Dahlias, because at that ticket size, obviously, you sell at a certain pace. I mean, we'll be happy if we do 4 years. Hopefully, we should do it that. Worst case, it could be 5 odd years. But that is broadly what it is. For the current year, I can't give you a specific guidance on Dahlias. But I can tell you that our total launch guidance, our total sales guidance for the current year is 20 to 22,000 crores of pre-sales.
But Mr. Tyagi, on this sales guidance for this year, 20 to 22,000, it's the same as what you did last year, which was about 21,200. Are you just being conservative? This number is going to be upped? Or do you think last year was an exceptional year?
So honestly, maybe it's a combination of both. Clearly, the Dahlia sales last year was an extremely positive surprise, even for us. You know that it will have such an enormous traction right at the launch stage. You know, so in that sense, maybe those numbers were slightly higher than what we had originally anticipated them to be. If you recall, our sales guidance for last year was 17,000 crores, and we did about 21 odd. You know, frankly, Rima, while I know the market goes gaga about this pre-sales piece, I mean, we do believe that the two metrics that everybody, including the media, should really begin tracking now is the free cash flow and the embedded margins being generated. Because, you know, if you sell 30,000 crores of stuff at a price point of 10,000 rupees a square foot at a margin of 2,000 rupees a square foot, you know, is it really worth it? So we don't get too swayed by the pre-sales number. The pre-sales number for us is a derivative of the high margin launches that we make. And so we believe that as long as we stay in the 5-figure category for our free cash flow generation next year, for our embedded margin generation next year, and free cash flow by and large on track to what we did this year with a slight improvement, we should be good.
Okay, all right. When is the Mumbai project going to be launched? You know, every time I speak to someone who's developing in the northern part of the country, they say, y'all are jealous, the prices are going up too much. But when are you coming back to Mumbai?
Really? So I think this is our first project in Mumbai. I mean, really the first time that we are getting something on the ground. I think we should be hopefully closing out very soon. We are in the final throes of the approval process. I mean, in a slum rehab scheme with multiple slum societies, it is a more complicated, you know, approval process than what, frankly, we were used to in Gurgaon. I'll be very transparent. But I think we are now almost at the business end of it. And I think we should be hopefully, you know, filing for RERA approval, you know, very, very shortly. And then depending on the time RERA takes, we should be ready to launch.
Any softness though in demand that what you have observed? Numbers, I think we've got most of them out. If you could give us two numbers now before we let you go. One is a qualitative aspect. Any slowdown are you seeing? And what is the rental income likely to look at for this year?
Okay, so the second point first, the rental run rate that we exited this year was about 6,000 plus crores. And we expect that the rental run rate by March 26 should be close to 7,500 crores across Cybercity and DLF, both parties put together. We should be at a 7,500 crores rental run rate by March 26. On the qualitative side of the demand, you know, frankly, I think the demand continues to be robust. But what we have always maintained is that this is also possibly the time when most responsible players also need to just ensure that they are not entering the speculative zone, either in terms of launches or in terms of price points, you know. And I mean, clearly, I think the demand is strong, but I think we do need to keep an eye on the future, frankly.
Mr. Tyagi, it's a short conversation today, but thank you very much for joining in. DLF has had a good run. Stock is up 8.5% this week, reacting to its numbers. With that, we close down on Bazaar from the entire team. Thank you for watching. Don't go anywhere. On the other side is Chartbusters.